Good morning, everybody. Good morning and welcome to the room. Hope you guys are doing all right today. Looks like we're a little busier today. Ron, compared to me, you're doing wonderful. Good morning, Miss Jen. Good afternoon, Miss Jen. Hey, Erla. Good to see you. Nice to have you guys here. Hey, Ed. Nice to see you. Slow day in the market yesterday, wasn't it? A lot of consolidation, a lot of doing nothing. Looks like you guys are keeping busy this morning, so that's a wonderful thing. It's hard to sit around and wait sometimes. Morning, Jay. Good to see you. Lot of FOMC members talking this morning, and talking this afternoon. A lot of people talking. Man, I appreciate that, Ron. He's going to need him. I keep trying to get him to hop a plane and come to Texas, but he won't do it. He says he'll be fine, so fingers crossed. Morning, Steve. Guys, every morning I go to forexfactory.com/calendar. I trade patterns that have been proven to win more than they lose. I don't trade news releases. Catch an Uber to Myrtle. There you go. He won't do it. He won't do it. His house is right in the path, so we'll see what happens. Hopefully everything works out just fine. We'll know Thursday morning. We will know Thursday morning. Guys, I'm looking for high impact. I'm looking for medium impact news. Yeah, we didn't either, Ron. I'm looking for things that can move the market. There's nothing today. Everything is low impact. Everything is just, it's noise, and it's not a big deal. It may move the market, but at low impact, we don't anticipate that happening. Tomorrow, you see medium, you see high impact. We've got FOMC meeting minutes tomorrow. I think it is, Steve. I think it's still category 4. I think they're anticipating 5. And it's not even the winds that have them worried. It's the surge. Yeah, last hurricane, Helene, came through with about 7 feet of surge. And went halfway up his backyard and flipped his boat. This one's supposed to be almost double that. So there's a good chance his house may get wet. We're hoping it doesn't. Takes about 10 feet to get to it, so we're rooting for him. He needs a bigger boat. Yeah, it was on the lift, and the water came up high enough to topple it, so it was kind of wild. But every morning, guys, let's get to work. Let's get to work. I'm looking for this news, guys, and there's just nothing today, but I check it every morning so I don't get caught up in somebody else's emotional reaction. Everything that I talk about today, guys, is going to come from the Nexgen page, specifically the trading guide page, and even more specifically on the first hour. Guys, we're going to talk about a high probability trade. I do this every day, and I know there's a lot of people like, man, I don't have to show up at the first hour. He says the same darn thing every day. But I do say the same darn thing every day because the reality is the more times you hear something, the more likely it is to stick. The more times you hear me talk about momentum, the easier it becomes to recognize it. The more times you see one of those lines on your large chart stop the market cold, the more you put yourself in a position to say, well, yeah, I'm not going to trade into that line, or that's a great place to take profits. So repetition is key with what we do, guys. And this first hour feels very lectury for you guys that are new with me. We're going to talk about a high probability trade. We're going to talk about a trade that is defined as when each indicator on every chart agrees with the rules for the trade. Typically, this is when the triggers are their strongest, no termination conditions exist, and there's no trouble spots between your entry and your target. Guys, the goal of trading is to get paid. The goal of trading is to win more than you lose. The goal of trading is to put yourself in a position where you can have advantages every time. I appreciate that, Jerry. My wife's on 25, still hasn't heard a word, so you're doing better than her. Guys, this high probability trade, this is your foundation trade. This is setting the tone. This is teaching you the skill set to get you what you need. This is a trade that typically wins 70 to 80% of the time when you follow the rules, guys. This is a trade that creates confidence through the memory of success. And most importantly, this is the trade that's going to teach you to read your indicators. And man, I can't overstate the importance of being able to read your indicators, to be able to look at your charts and see the advantages that the software is giving you, to be able to look at your charts and understand where the market is likely to continue, where it's likely to go, where it's likely to stop. Guys, chart reading should be the first skill that you develop, and you get that from the high probability trend trade. I love that. Big Dog, I read that somewhere. Confidence through the memory of success. And it's such a true thing. And that one has stuck with me. I've been regurgitating that phrase for years now, I think. Chart reading's 90% of your day. And man, that stinks, doesn't it? To have to sit still, to do nothing, but still have the ability to make more money than you probably ever made at your real job. 90% of your day, you're doing nothing. 90% of your day, it really is, Big Dog. He says it's like a baseball player knowing when he sees a fastball over the middle. And that's it. And that's repetition, right? After you see 100 fastballs over the middle, you know exactly what it looks like coming out of his hand. And you pop it over the fence. Good morning, Mario. Good to see you in here, man. Guys, if you sit in front of your computer for 6 hours this morning, you're likely to spend 36 minutes trading. Maybe 36 minutes trading. And the other 90% is waiting. It's being patient. And I'm going to tell you from my own experience right now that the difference between successful, confident, consistent day traders and the people that are struggling is the ability to do absolutely nothing when there's nothing to do. So we're going to take this morning and we're going to focus heavily on recognizing the advantages that get us into that 10%. When we talk about the high probability trend trade, when we break it down, we look at it, it's only 3 rules. And each rule creates an advantage, or each rule allows you to see an advantage that plays into that 10%, guys. And the first rule is strong trigger lines. And strong trigger lines are going to give you the advantage of momentum. This is 33% of the advantages that we're looking for this morning. Then we're going to go to rule number 2, if rule number 1 is met. And no termination conditions is going to give you a clear path. You're going to have room to your profit targets. And guys, momentum and a clear path are enough. Momentum and a clear path are enough to create a trading plan that is amazing, that is consistent, that is profitable. And your rule number 3 is very specific to the high probability trend trade. And your rule number 3 is going to change depending on the trade that you're taking. But initially, rule number 3 is going to give you that entry area. And that entry area is exactly where the market is most likely to continue, with the momentum and with nothing in the way. So we're going to break down these 3 rules individually and talk about them. And we're only going to use 2 charts to do it. More specifically, we're going to use the most current bar on a large chart. And your large chart is a slow chart. It's a very broad stroke of a brush, if you will. We're painting the side of the barn here, guys. It doesn't move fast. It's difficult to see change. But what it does is, in that most current bar, it'll define the direction of the market. It will let you know if the momentum is present through rule number 1, and it will identify any areas that may be problematic, and that's going to be rule number 2, guys. 66% of the work gets done on the large chart, and I'm going to tell you right now that there's no reason to turn your attention to that smaller, faster chart if those rules are not met on the large chart. But once you have momentum, that advantage from rule number 1, and once that path is clear and there's room to your profit targets, you will turn your attention to a smaller, faster chart. Guys, this is your entry chart. And your entry chart gives you an x-ray of this one single bar that got all that work done for you. And that x-ray, what it's going to do is it's going to allow you to pinpoint the best of the best entry, exactly where the market is most likely to continue. And by using this refinement process, I'm going to show you a picture of it inside of the one bar. By using the refinement process, 20 to 30 bars typically happen on that small chart inside of that one bar. We're going to use that to wait for pullbacks. We're going to use this small chart to pinpoint exactly where the market is most likely to continue. And honestly, you're going to be well into your trade on the small chart, and the large chart's still going to be on that one current bar. So it's the refinement process that's going to allow you to reduce risk, that's going to allow you to increase profit potential. And rule number 3 is what's going to show you where that likely to continue spot is. We use these two charts for a very specific reason, guys. Who are you trading with and who are you trading against? You should ask yourself that. Your large chart defined the areas, the direction, the momentum. Your large chart is exactly what the people that can move the market, that have the money, the influence. The large chart shows you what they want to have happen. And guys, I'm going to tell you right now, if they want it to go up, it's going to go up. And if they want it to go down, it's going to go down. And the reality is, the easiest path for all of us in this room is to just trade with the large chart. So when they say up, when they establish momentum, or when they start getting near those key areas, guys, let's do what they're doing. And then the small chart is like the small crowd that still has more money than any of us. And they fight the large crowd. And it seems like they lose a lot, but they don't. They're taking very quick profits. They have enough money to create a ripple in the overall look. But about 70 to 80% of the time, we're able to pinpoint where their ripple ends. And that's that point where the market is most likely to continue. The small crowd fights, and we rely on that fight to get us to the best of the best entry for the high probability trend trade. You will be able to use a refinement chart and pinpoint exactly where their failure is most likely to happen. This will become your entry for the high probability trend trade, guys. We're going to take the first hour. And if I have new people in here, and I see a couple new names, and JK, it's good to have you back. Guys, the first hour feels like a lecture. It really does. We're going to break down this high probability trend trade. We're going to talk about the trigger line and the Fibonacci rules for when it's okay to trade. I will break them down individually. We'll see exactly what they look like. We'll talk about what they mean to you. And then, guys, I want you to simulate, and I want you to practice. And I want you to be willing to make mistakes. My wife, who's a much better person than me, one of her favorite phrases is give yourself a little grace. If you're brand new, there is no reason for you to feel the pressure of being great at this. There's no reason for you to feel the pressure of having to win more than you lose. Guys, this is an educational process. You're on simulator. So practice, but I want you to post those pictures in the room, guys. Tell me what you see, because the goal is to become a chart reader. And I don't want you to hesitate to post losers, because losers are where the best lessons come from. There isn't a trader that I've ever met that doesn't lose. You will lose. It's a part of the process. But there's usually a lot of great information there. So simulate, but post in the room. And that's really the first step to becoming confident ASAP. We will simplify. I'm going to hand you a plan for the high probability trend trade, something that optimizes your chances of success. And I'm also going to include in that plan what we call a medium probability trade. And a medium probability trade is when most of your indicators agree for the trade, but an issue exists. This will be the majority of your trades, ladies and gentlemen. An issue will probably always be present, but you understanding advantages is going to give you the ability to work around that issue, to manage a little more aggressively. Your chart reading is going to put you where you need to be. But you've got to learn these looks. You've got to learn these very basic looks so they become easy. That's where the spreadsheet comes in. And Nexgen gives you the spreadsheet when you download. I give you my spreadsheet every day, guys. And I'm going to do it again right now. I'm going to drop it in the room. And the spreadsheet is a couple different things, guys. First, it's a trade journal. And I want to go back to the Nexgen page. And I want you to see this, the personal trading journal, guys. And at Nexgen Software Services, we strongly advocate tracking your trading progress using a dedicated spreadsheet or a reputable tracking program available for purchase online. I'm giving you one free. And maintaining a trade tracking sheet allows you to effectively document your trades, guys, to monitor your wins and losses, and to create a centralized study guide for your trading journey. I thought that would be cool to add. I don't usually say that, but that's exactly what you have. And I've built this spreadsheet very specific to the new user. The first page is your trade tracking. Every time you take a trade, guys, put it on this sheet. You can start below the little things that I've put in here. There are links on how to paste into the spreadsheet. And there's even one how to annotate charts. And I stole this from one of the Nexgen users because she did an amazing job with her annotations. And every time she posted in my room, she would talk about rule number 1 and what it means to have it met. And she would talk about rule number 2 and what it means when rule number 2 is met. And then she would talk about her entries and exactly using the verbiage from the rules. And she would tell me exactly what she saw, what she felt she was up against, what she felt was in favor. And then she would show me her trade all the way to completion, guys. And that's in that spreadsheet for you, because that really is the best way to get feedback in this room. Every time you post, it's like a private session. I'm going to look at what you did. We're going to talk about your chart read. And you need to record your trades. And more importantly, you need to come back and study them. So you might take 10 trades today. Tomorrow morning, when you open up, when you're drinking coffee, you should look at what you did yesterday. And you should say to yourself, man, what worked? And what didn't work? What are the patterns that are bringing me success in the market? What are the patterns that seem to be taking that success from me? If you go through this little drill every day, you're going to notice that what works keeps you relaxed, guys. Trading doesn't have to be stressful. You'll find out that the things that don't work typically stress you out because you know you're breaking rules, you're forfeiting advantages. And guys, this brief historical study every morning, it will prepare you for the day. It will accelerate the learning. And then every time you post one of those charts in my room, guys, you're opening the door for a conversation to make sure that you understand momentum and clear path, to make sure you understand the best entry. And open yourself up to being okay making mistakes. But the one thing that happens is every time you post in the room, guys, I begin to recognize the patterns in you. Everybody has a thing. Some of you get nervous and jump in too soon. Some of you get nervous and jump out too soon. Some of you love to trade directly into lines and you can't figure out why you keep losing those trades, guys. I need 4 or 5 annotated charts from you. We will find your thing. But the cool thing is that we'll work together to overcome it. We'll identify it. We'll come up with a plan to fix it. And I firmly believe that there's nobody that I can't fix as long as you do your part and give me the opportunity to see what you're doing. The second page, or the second tab, is the rules for the high probability trend trade broken down individually. The first 2 sections, the green, strong triggers, clear path, once you understand these, the world opens up for you. But I think it's important to also understand what it looks like when the rules aren't met. And some of the best pictures that people post in this room are pictures that say, you know what, I don't have this rule met yet. I'm going to sit on my hands and wait. So rather than taking a trade, they're taking a picture, guys. And the more pictures you take, the quicker you're going to get to where you want to be, the faster you're going to learn to read your charts. There's a favorite looks section. Every time your rules are met, or if you're studying new patterns for a new trade, guys, build your trading plan in the green section here. And then the client trades is almost 400 pictures of you guys being amazing with this software, embracing those advantages, taking beautiful entries, outstanding management. And this is a study guide for you new users. Go through, start clicking on these pictures, start recognizing that momentum tends to push the market, that these lines can stop at cold. There is the entry sequence for both the high probability trend trade long and short. Excuse me. You NASDAQ users, it's kind of funny. The NASDAQ trades about 10 times faster than what we teach on. And it's definitely a second step in your journey. There is one picture in this one. I got rid of every other picture because I think if you're a NASDAQ trader and you learn this one simple thing, it'll change your world. It absolutely will. But if you're not good at the high probability trend trade, the NASDAQ's going to be difficult for you. I'm just throwing that out there. There's a very mechanical management plan and then a lot of ideas on how you can change your management. Patterns that repeat themselves and a whole section dedicated to termination conditions. So this sheet is a study guide. This sheet is a trade journal, guys. Take advantage of it. The more you fill it out, the more you study it, the faster you get to where you want to be. There's a lot of people that believe that taking trades is the way to get solid. I'm going to tell you right now, guys, taking pictures is how you get good at this stuff because it's a chart read. Wins and losses, don't matter in the beginning, guys. Learning a pattern that wins more than it loses, focusing on the execution, because if you have something that wins 7 out of 10 times, it's difficult to lose money unless you're really struggling with management. But if you're posting them in the room, we can fix that. So we're going to break it down. Are there any questions before we get going? I'm going to flap my gums and lose my breath and dry out my mouth talking about this high probability trend trade. This is the first hour. The second half of class, the next 2 hours, are devoted to your pictures, giving you feedback, talking about concepts that you need help with. I want you to turn this into a discussion rather than a lecture. Take advantage. Be stingy with the time. Don't worry if you feel you're asking too many questions, because I'm going to tell you right now, the people that ask the most questions are the people that get to where they want to be the fastest. Don't sacrifice your journey because you're afraid of hurting somebody's feelings. They can tape up and play hurt. We'll be good. Rule number 1, guys, strong triggers, large chart. Large chart leads the way. Strong trigger lines are going to give us the advantage of momentum. How easy is this lesson? Let's start with trend. If the background on the large chart is green, the market is going up. It's that simple. You're looking for rules to be met for high probability trend trades long. If the background is red, the market's going down. You're looking for rules to be bet for high probability trend trade short. You guys want to try something just for fun? Is this an uptrend or a downtrend, ladies and gentlemen? I want you to feel smart right off the bat. Give me a U or a D. Is this market going up or down right now? Which direction should we be looking for rules to be met? Don't be shy. Shy people fall behind. The background is red. Anybody? Oh, JK, see? This is why we do that. If the background is green, guys, you're overthinking. Simplicity. Is the background behind the most current bar red or green, guys? It's red. We're only looking for rules to be met for high probability trend trade short. It doesn't mean that they're met, but it means that there's no way we can have the advantage for a long trade right now. Let's sit on our hands. So JK, keep it simple. Green is up, red is down. And whatever the large chart background color is, that's which direction we're going to look for those rules to be met. Jen says neither. It's impossible, Jen. As long as it's red, it's down. As long as it's green, it's up. It just doesn't mean that there's the rules met, but that's which direction we're going to look, because rule number 1 says strong triggers. And the only way that I can have strong trigger lines, guys, is if all of the colors match. If the background is green, the large triggers need to be green. And if the background is green, the small triggers need to be green. I need to see 3 green triggers. I see green triggers, but a red background. I know that that first advantage isn't in place. Strong triggers means that there's separation between the small and the large. I want you to picture scissors opening up, ready to cut. When I have smalls above the large, when I have the large that are widening, they're angled in the direction of the trend, guys, that gap between the two lets me know that the odds are favorable for the market to continue up. In a downtrend, when the background is red, both the small and the large triggers must be red, but it's the space between the two. This is what lets me know that the odds are favorable for the market to continue down. Guys, this is strong triggers and odds favorable. That's how you're going to hear me reference momentum, guys. Odds favorable momentum pushes a market. Odds favorable momentum can break key areas, and odds favorable momentum can even cover up the mistakes that we tend to make as new users. When I have strong triggers up or strong triggers down, this is where we're going to use that smaller, faster chart to refine, to look for that entry. On a large chart, that one slow moving bar, you're going to see these tails. These tails are entire pullbacks and then moves in the direction of the trend that happen on the small chart. You're going to be able to pinpoint where these tails are most likely to form, and you're also going to be able to use it to go back and study. So I'm going to open up a large chart again. The colors don't match. The momentum isn't there, guys. And I want you to see this, though. Here's your strong triggers. Smalls above the large, space between the two. Smalls above the large, space between the two. You get wonky, not, wow, look at how long that happened, where the colors didn't match, where the advantage wasn't present. But there was strength all the way down. and there was strength pushing you through areas, guys. So go back and take pictures of strong triggers. Make sure you can identify them. And then when your scissors close, when those small triggers work their way inside of the large triggers, guys, this is a weakening of the large triggers. This is a slowing of the trend. This is a visual that you no longer have the advantage. And when you have weak triggers, anything can happen up or down. What you'll find is that I'm a big fan of language, guys. And if you learn the language with the looks, every time you see strength, you'll think odds favorable. And every time you see weakness, you'll say anything can happen. And you're learning to be patient because the advantage isn't a never-ending process, guys. You may have strong triggers that weaken. And these anything can happen triggers very often precede a reversal, especially at key Fibonacci areas. Odds favorable momentum, let's pinpoint a tail, let's take a trade, let's go long and ride that momentum up to the weakness or to the next area. And then anything can happen. Once again, there's a reversal, creating odds favorable momentum. We're going to pinpoint our entries. We're going to ride that wave. And then we begin to see that indecision, the same way we just saw on the S&P, guys. When the colors don't match one another on the triggers, or when the colors don't match the background, there is no strength. This is a transition, guys. This is where the large crowd fights, where buyers and sellers are going head to head and they can't seem to agree. This is where people tend to try to predict what the market will do. I know that I don't have momentum, but I think it's going to go up. And the momentum isn't present, but I believe it's going to go down. And the reality is, guys, in these transition periods, this is your 90%. This is where you sit. This is where you wait. Eventually, somebody's going to win. And when they do, they're probably going to create the momentum that you need to look for a trade. So this is typically the easiest lesson for us because you either have it or you don't. And let's go back to some live market, large chart. So do I have odds favorable momentum on my large chart, ladies and gentlemen? What do you think? The smalls are below the large, but everything is green. Is rule 1 met on this S&P chart? No, absolutely. Perfect. Which means I'm sitting on my hands. How about on the NASDAQ? Do I have strong triggers on the NASDAQ? Smalls are above the large. They're wide. Everything's angled. Absolutely, guys. That is running like a freight train directly into red lines. Let's look at crude oil. Is there separation between the small and large? Is there a gap? Are the scissors open and ready to cut? I mean, well, there we go. My scissors are starting to open. Guys, you're witnessing the beginning of momentum. The smalls just broke above the large. Everything is going wide. Oh, look at that. And the momentum increases right in front of your eyes, guys. That most current bar will define trend. That most current bar will define momentum. So it's strong momentum, not when the triggers are starting to turn down, big dog. Are you talking about on the S&P? They're still green. On the NASDAQ, so here's your NASDAQ. Strong momentum, pushes all the way down, small triggers return right at a key area. You see a reversal. Do you see the gap between the two? That's your momentum. It's the separation between the small and the large. And you're going to see this and you're going to go, oh my gosh, the small triggers are starting to turn down. Is that what you're referencing right there? How they're kind of bouncing? Yeah, don't get sucked into that because there it goes and it continues up. So these are moving averages, big dog, and every time price fluctuates, you're going to see these. Don't get caught up on it. What you need to focus on is separation. And as long as it's there and everything's green, dude, it is strong. And you'll see, let me see if I can find an example of it. There's a little hitch right here, and there's a little hitch right here. And these are where the people that didn't believe that separation meant strength jumped out of their positions rather than held them for the next area. Don't let the little hitch mess with you. And we'll see how this one turns out. But this one happens to be directly into a termination condition. There's one of those hitches right there. So great question. I'm glad you brought that up. Because A lot of people will get so caught up in these micro movements that they miss the overall picture, guys. And I promise you, strength, weakness, separation, back together. That's really as easy as rule number 1 needs to be. And once we have momentum, let's make sure we can make some money. Let's make sure that there's room to the profit targets. Guys, rule number 2 is the most broken rule, because rule number 2 is going to force you to be patient. Rule number 2 is going to have you trading into areas that might stop the market. And termination conditions are just Fibonacci areas on the large chart. Once again, large chart defines the areas, and these areas on the large chart can stop the market. These areas on the large chart are where the buyers buy and the sellers sell. And these areas on the large chart are just horizontal lines. These are where decisions are made. And I can tell you, you don't want to be in the middle of a decision-making process, because they might spike, they might jump, they might reverse completely, guys. So we're going to look for areas on the large chart. We're going to let the large chart define our problem areas. It can be a divergence high or a divergence low. And divergence is a loss of momentum, guys. And you see this line print off of a pivot. Good morning, Miss Cindy. And this line doesn't even print until like the 3rd bar down. You're going to use Fibonacci resistance, the red lines. You're going to use Fibonacci support, the blue lines. You're also going to look for these yellow 1-to-1s, guys. And all of these are areas where decisions are being made. So in order to determine whether or not they're likely to stop the market, we let price get to them so that decision-making process kicks off. If the buyers are in charge and they're pushing up and these Renko bars are cranking to the upside, when they reach Fibonacci resistance, the decision-making starts. So you're going to ask yourself, where are my triggers? Where are those T3 trigger lines that established momentum? Where are those T3 trigger lines that showed me weakness? And if they remain below an area of resistance, or if the sellers push all the way to support and they remain above an area of support, guys, rule number 2 is not met. This is an area that may stop the market. This is an area that may create a bounce. This is an area where fights might happen, guys. And if the triggers remain below resistance or above support, for the love of fuzzy, do not take a trade into that area. Textbook. Termination condition. Big dog, there's your hitch, brother. But momentum broke the areas. Right to the 1-to-1s with weakness, and look at the retracement. And guys, if you scroll back on a large chart, support stops it. Resistance reverses it. Support stops that progress. Divergence high doesn't let it go any higher. Man, these lines are strong. They're important. They're valid. These are where people are making decisions. I want you to scroll back and take pictures of termination conditions and understand that these areas can stop the market. They're exactly where decisions are being made. They stop the market all the time. But guys, they break. They have to break. If they didn't, we'd be caught in the same range for the rest of our lives. When is an area considered broken? Great question. So if price reaches an area, the trigger lines remain above, no trades into that area. It still has the potential to break, but let's not get caught up in that decision-making process. Once your small triggers and the large triggers get below resistance or get below support, support behaves as resistance. The area is considered broken right here, where the second line of the large triggers gets to the other side. When the smalls and the large get above resistance, resistance behaves as support, and it's broken once the second line of the large trigger gets through that area. And guys, this path will remain clear until you reach the next area. So let's take a picture, because I'm going to introduce the third potential look. Price reaches an area, triggers are above, sit on your, whoops, wrong one. Sit on your hands and do nothing. Price reaches resistance. Triggers remain below. Sit on your hands and do nothing. Can you give me a why if you're cool with that? It really is that easy, guys. Small and large get below support. Now the path is clear. Let's look for rules to be met. Let's see if we can find one of those high probability trend trades. Small and large get above resistance. The area is broken. Let's look for long trades. Let's look for rules to be met. In the very beginning, guys, these are your options. It's either broken or it's not. Give yourself a week or two to get comfortable with this. And what this does is it opens you up for the next trade in your trading plan. When 50% of your triggers break through the area, but 50% have not, and you have odds favorable momentum, guys. This is the look that can break areas. This is the look that can smash through fibs and one-to-ones. This is what it says. This says that this Fibonacci area right here, because of the momentum, because of the trigger line position, has the potential to break. But it's not broken until the triggers get through. And guys, if it's only potential, that's not even a word. If it's only potential, rule number 2 is not met. That path isn't clear. Guys, this is going to be your first medium probability trade. And this will probably be the trade that you see more often than anything. And then Big Dog says this is the look you now have confidence in. Buying on the pullback and getting in at the correct area. Rather than being, that's great. That's exactly what we want, guys. And that's the confidence that we're working towards. And it gets easier every day. So brand new users, we got 3 options. The first 2 for the high probability trend trade are it's either a termination condition because the triggers haven't broken, or it's a clear path because both triggers have gotten above the line. Do not get caught up in the color of the line. Let the trigger location define. Termination, no trades. Broken, let's trade away. And then guys, here's the potential to break. Small smash through the area. Larger lagging behind. Odds favorable momentum. And I want you to see this one had the potential to break, but it didn't. But there's still an opportunity to maybe make a little money on these trades. So 3 options, brand new users. It either is or is not, and then it has the potential. That'll be your second trade. Let's go through and take a look once again. Wow, look at this market go. This is fun, right? Straight up termination condition. Areas broke. This one had the potential to break, but didn't. And then it pulled right back to resistance as a termination. And then this is the NASDAQ. So directly to a termination condition, even with odds favorable momentum. And it reverses the market. And guys, do you see how this is odds favorable and the potential to break until that second line gets through? And we don't know if it's going to break or hold. So we have to be patient. Pretty cool, right? Is everybody with me so far? Can you give me a Y in the room? JK, is it getting easier as you hear the same thing over and over? Tracy, is it getting easier as I keep repeating the same darn things over and over? I hope so. It's designed to get easier every day, guys. Rule number 2 is a royal pain in your ass. Rule number 2, there will be times when the path isn't clear because of stacked areas, guys. And rule number 2 forces you to sit on your hands and do nothing initially because I've got support and then support and then support. And guys, this is 90% of your day. It's okay to do nothing. The futures markets trade billions of dollars every day, guys. You don't have to be in every move. Every tick isn't your tick. Every dollar isn't your dollar. Our job is to get paid. Our job is to trade patterns that win more than they lose. And not having a clear path is not the beginning of that process. And what you will find is that rule number 2 will keep you out of trouble. Fibonacci gives you the ability to see where the driving forces in the market are likely to make decisions, where they're likely to react, where they're likely to fight. Rule number 2 can keep you out of consolidation. Rule number 2 keeps you out of that chop. And 90% of your day, Tracy, rule number 2 was my downfall. For the better part of a year, I would trade into these lines. And you know what's funny? And for those of you that are brand new, my brother is John Novak, my older brother. He wrote the software. He's got 27 years. And the phrase that he said to me, Tracy, that really helped me is he said, you know what, Mark, how many times are you going to trade into these lines hoping they break? And then he turned it into Ron Burgundy. He goes, because 60% of the time it works every time to stop you. So what I had to do, Tracy, is every time I looked for a trade, I went through the language of the termination conditions because it was my downfall. So every time I looked for a trade, I would ask myself two questions. I would say out loud, scaring the dog, did price reach an area? And if it did, I would ask myself, where are my triggers? And I would resort out loud to that right there every time I looked for a trade. And what it did is it began to train my brain, Tracy, how to overcome the challenges. And I started studying what it looked like to have a termination condition. And guys, I'm telling you right now, you can beat any affliction that you have with a little bit of study and repetition. You have to develop trust. And one of the biggest trust things that you have to develop is that when you have to do nothing, you have to believe there's another trade happening. You have to believe that this cyan line is not the end of the market forever in the S&P, that there will be more fluctuations, that there will be more movement, and that you will be able to find your high probability trend trade. You will be able to find your momentum trade. You will be able to find your HVA trade. And that's rule number 2, guys. Lines on a large chart can stop it. The more study you do, the more pictures you take, the more you're going to believe in that. Large chart, Mario. Large chart defines the areas. Large chart defines where the market may stop or bounce. But great question and great segue, right? Man, so Tracy, the fear of missing out. Why do we have the fear of missing out? Because we don't want to be left behind, right? Because what if this one works? Because what if, for some reason, Tracy, these weak-ass triggers and the market decides to go up? Well, I want to be a part of that. Or look at that. That looks like momentum. I want to hope that this line breaks. I hope that this line breaks. I hope that this support doesn't stop. And if you have the fear of missing out, it means that you haven't gone back and just done this. How many opportunities do you think there were in all of this? My brother netted almost $4,000 in the S&P or in the Nasdaq Live yesterday. He was over $14,000 on Sim. Guys, there are so many opportunities. And Tracy, once you do a little bit of work to believe that you don't have to trade into one-to-ones, that there will be another opportunity, you start not worrying so much. You start saying things like, man, that's not my trade. That's not my money. This isn't my best look. The reality is that my advantages are the reason that I'm able to win more than I lose. My advantages are what tell me to get into that trade. And fear of missing out is real for everybody in this room. For everybody in this room. And anyone that says that they've never been a victim to it is just a liar. Don't trust them. Don't give them your car keys. But once you have momentum, life gets good. Once you have a clear path, it gets even better, guys. You have a semi, full loaded, 110 miles an hour going down the highway. And now we just have to find an entry area. We're going to go to a smaller, we're going to go to a faster chart because the rules are met. Mario, the only time termination conditions are true on a small chart, the only time I will let it talk me out of a high probability trend trade is if I see 3 divergences in the same price range on a small chart. Guys, divergence is a loss of momentum. The small chart gives me 20 to 30 bars for every 1 bar on the large chart. The small chart will show me change. It'll show me the loss of momentum that I won't see on the large chart because the large chart's so slow. So 3 divergences in the same price range may terminate the trend. If there's weak triggers that you learned in rule number 1, it makes it more probable. If you have what we call a head and shoulders, a higher low pivot or a lower high pivot, guys, this adds strength to it as well. This is the only time when I have odds favorable momentum, the only time when I have a clear path, then I'm going to say, whoa, pump the brakes. Rule number 2 is not met. The only time the small chart gets to talk us out of odds favorable momentum in a clear path. But if there's not 3 divergences, guys, let's define an area. This is where the magic happens, guys. This is where the precision comes in. And we're going to define our area with such a high level of precision that you're going to use a limit order. You're going to wait for the market to come to you, and you're going to wait at an area, fibs, mid-bands, and yellow 1-to-1s. And you're going to insist that those areas are inside of triggers, guys. And if you say it all in one breath, you're going to buy or sell a pullback, that fight from the small crowd, and you're going to do that in an area inside of triggers. And that's rule number 3. And this is how you're going to pinpoint where the market is most likely to continue. For you brand new users, for my new kids, for the people that need the best of the best to create that confidence, favorable large triggers is always the best option. Favorable large triggers means that your large triggers and your synthetic triggers on the small chart, it's just 2 sets of large triggers. The small chart large triggers, the large chart large triggers. We put them together on the entry chart. When they overlap one on top of the other, guys, like 2 snakes riding piggyback, you have created the smallest point to have an area inside of them, guys. This is going to reduce risk. This is going to make it easier to pinpoint your entry. And favorable large triggers, it works on the premise that price returns to large triggers, whether it's a large chart or a small chart. If it's a range chart, a minute chart, a month chart, price returns to large triggers. So my small chart large triggers are where I expect the price bars to return. The areas inside, fibs or 1-to-1s, may produce a bounce. It's like a brick wall and you're throwing a tennis ball. But we're using 2 charts. So these synthetic triggers are where my large chart price may return to. And that mid band inside may produce a bounce. So guys, I've got 3 potential bounce points inside of 2 triggers. You're going to create a window. And this window is going to define exactly where that large crowd is, or a small crowd is most likely to fail. It's going to define exactly where the bounce is most likely to happen. And it's just a process to get there. When the large chart says up, green background. When the large chart has odds favorable momentum through strong triggers. When the large chart has nothing in the way, that clear path, your small chart is going to look like this. Everything screaming to the upside. Tracy, fear of missing out kicks in somewhere right about here. And you're like, oh my gosh, it's going without me. Oh my gosh, I'm never going to get this entry. Let me jump in. And then the small crowd shows up and fights, guys. And this reversal bar, this is the beginning of the pullback, that fight from the small crowd. The reversal bar is not your entry. The reversal bar says, hey guys, let's look for those favorable large triggers. Let's look for large and synthetic. Are they overlapping? Are they one on top of the other? And guys, the trigger lines are not your entry. Your entry will come from that window of opportunity. And for a long trade, it goes from the highest point of support, which happens to be that mid band, to the lowest point of support, which happens to be these 1-to-1s, inside of favorable large triggers. And guys, inside is all caps. I expect price to return to the triggers. I don't know if it'll be the top of the triggers or the bottom of the triggers. I don't expect the triggers to stop it. I expect the bounce to come from the area within. And since my large chart has odds favorable momentum, since my large chart has absolutely nothing in the way, guys, you're going to activate a limit order just at the top of that window, just above the highest point of support. And if the small crowd has it in them to get to that spot, guys, you are in the best of the best, the high probability trim trade. Anything below the triggers, anything on the wrong side of the triggers, any line down here, guys, this is beyond where we expect the market to go. This is where the market shouldn't go. This is not a part of the window. So Tracy, a bar is considered a reversal bar when it prints. So let's see if we can find a live example real quick of, that's my large chart. We'll go to the small chart so it's a little bit faster. Here we go. So if this red bar turns green, that will be a reversal bar. If this bar finishes printing. Here we go right here. Boom, right there. Once it turned into an up bar, that's when it's considered the reversal bar. Does that make sense? That was pretty live. If it hits this little gold line, it'll turn into a reversal bar. And we'll see if it does. It may not. So it's the first bar in the opposite direction. So if everything is going down, it's your first up bar. If everything is going up, it's your first down bar. Does that make sense? So if it's bouncing, it's not a reversal bar. If it prints, it is a reversal bar. The next bar will start, and it's instantaneous. But Tracy, what's going to happen is as this market is moving up, before that reversal bar ever happens, after just a little bit of study, you're going to already start looking at triggers. You're going to already start looking at areas, and you're going to start calling your shots before that reversal bar ever happens. You will go from waiting for a reversal bar to anticipating a reversal bar. Does that make sense, everybody? Is that fair for you guys that have been doing this a while? You go from worrying about, oh, I hope it prints. You'll be like, oh, when it prints, I know exactly where I'm getting in. And that's going to come through a little repetition and a little bit of study. And you'll be able to do it both directions. Everything's going to be red on the way down, and you're going to be thinking, oh my gosh, with all this momentum and a clear path, they're never coming back for me. And then the small crowd fights. There's your up bar, Tracy. There's your reversal bar. And when this reversal bar prints, you're going to find your triggers, large and synthetic. You're going to remind yourself that's not your entry. Price is most likely to bounce at an area inside of favorable large triggers, which means that you have one line, a mid-band. And you're going to activate a limit order a couple ticks below it, and you're literally going to get into the market as it's on its way up. And you're going to remind yourself that anything beyond those triggers is not a part of the window. Anything beyond those triggers is where we don't want the market to go. And it takes a little practice and it takes a little study. And Tracy, we will go back and we'll do a bar by bar. We'll find an example so that you can see the whole process this morning. I think so. I think market replay helps a lot because you can hit pause, Tracy, and you can look and make sure that rules are met. But once you guys can define this entry, once you understand that the market is most likely to continue from areas inside of triggers, what it does is it defines for you where the market shouldn't go. And this is going to be your first stop placement, guys, where the market shouldn't go. And your initial stop will be 4 to 5 ticks beyond those triggers. 4 to 5 ticks above the trigger lines, above the areas inside, guys. And the reality is that if the market can push through those areas, if it can push through those triggers, your advantage is gone, your edge has gone away, and this will be your first stop. And I want you to write this on a piece of paper right now in your most delicious crayon. I will lose trades. I will take losses. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Guys, every 10 trades that you take, you're going to lose 2 to 3 of them. But every 10 trades you take, your job is to make sure that they had momentum, a clear path, and an entry area. And it's okay. Losing trades is a normal part of a positive equity curve. And what happens is because of the precision, your losses are smaller. And once you get a reversal bar in the direction of your trade, you'll reduce risk even more. And it's not uncommon to see you guys nailing great entries. And even if it doesn't work out, giving back maybe 4 or 5 ticks. And guys, this is the best of the best. Areas inside of favorable large triggers gives you the most precision. It gives you the least amount of risk. It gives you the highest probability. And let's do this real quick. Let's open up. And just for grins, let me find my small chart. There we go. Just for grins, I'm going to get off of the NASDAQ for this one. Oh, Cindy, stay safe. You guys make me nervous. I'm going to pull up the S&P. Who's taking a trend trade today? Keep me from searching so much. I did. I took a trend trade today. Let me figure out where I took it. This was a pretty good one. So check this out. I'm going to circle this tail. And I'm going to bring up my small chart. And I'm going to go back and I'm going to find this tail. There it is. All right, so we're going to do this real quick. And this is going to be, Cindy, stay safe. I'm going to put nothing but trigger lines on my large chart, guys, because I want you to see this and I want you to focus on the entry. And for you guys that are learning how to identify these high probability trend trades, I'm going to take the cheater off as well. Everything starts on the large chart. So new guys, this is for you. Give me a Y if rule number 1 is met. Small's below the large, large or wide, there's space between the two. This is a market where the odds are favorable for the market to continue down. So in the moment, this is what you need to see. This is what you're going to recognize. Let me see where that one's trading, 73.75. So the bottom of this bar, see how it lines up over here? This is what it's going to look like. Do you guys see how no areas have been reached? There's not a fib, there's not a divergence low, there's not yellow 1-to-1s, and I have a clear path. Is everybody good with that? Odds favorable momentum and nothing in the way. And this is going to be your look on the large chart. So guys, we're done with the large chart. Gone, out of here. Who needs it, right? Probably shouldn't have done that. There we go. And this will be the look on my small chart. And guys, at the small chart, when I'm waiting for that reversal bar, and Tracy, this is how it's going to become easier for you guys. I can already look at my triggers. Do you see this, the large and the synthetic, how they're overlapping? And I can already see that I've got some 1-to-1s here, and there's a mid band, and then I've got Fibonacci resistance up here. So I've got a couple areas that are starting to line up, but I'm waiting for the reversal bar. And at the time of the reversal bar, guys, you can do this mentally. You can do this with a box. There's my trigger lines. Does everybody see it? There's my trigger lines. My lowest point of resistance is going to be these 1-to-1s and probably this mid band. They're a tick below, guys, but as price comes up, these moving averages come down. So if you're resting on the bottom, that's cool. No worries at all, because we expect price to hit those triggers. And my highest point is this fib. So I'm going to drop the box down a little bit, and I'm going to say to myself, all right, here's my window where the market is most likely to continue. And I'm just going to, oh, it's not going to let me sell. So I'll just create a line here. My limit order is going to go a couple ticks below that lowest point of resistance inside of favorable large triggers. And guys, you're already locked and loaded. Reversal bar prints, you've identified triggers, you've identified areas, and your limit order is just below. And you're saying to yourself, man, I hope these guys can push it. And they start coming up. And see how the triggers come down? And these areas get inside. But we're just waiting. And we're going to go a couple ticks below the mid band. We've got to keep moving that down because it's moving down. And the market comes up. And boom. There's our entry. And guys, I did the cardinal sin. John, my stop is going to go where the market shouldn't go. And that is typically 4 or 5 ticks above the highest point of the trigger lines. Does that make sense? So I'm in this trade right at the mid band, right inside of triggers, and my initial stop is up here where the market shouldn't go. And I'm in this trade and I'm like, oh, this is exciting. Whoa, what did I do? And look at that, right off of the areas, I get a reversal bar. And John, check out this good news. Once I get a reversal bar, my new stop is 2 ticks above that reversal bar. And ladies and gentlemen, you have 1 point worth of risk on this trade. You have literally, oh my gosh, 5, 10, 15, $20 of risk on this S&P trade, entering at the market where the market is most likely to continue. And now I'm going to bring that large chart back up. And I want you to see something. And this is how you're going to study. I'm going to put a circle right around the top of that bar. Whoops. We're pretty close to the top of that bar. And when I go one more bar on the large chart, guys, there's your tail. And that tail was the pullback to an area inside of favorable large triggers. And this tail is how you can go back and study. And if you want to, you can go back and do these bar by bars. And with this momentum, guys, that market absolutely cranked down. And my exit was right at Fibonacci support. And guys, that is the high probability trend trade. Does that make sense, everybody? So what we can do, whoops, I'm going to put my template back on here. Oops, I did it again. So what you guys can do is you can literally go back and circle tails. You can go back historically 10 days on every chart, and you can circle a tail. And if that tail lines up with an area inside of favorable large triggers, then guys, you have the look that you're looking for. Take that picture, get it into your spreadsheet. And I'm going to tell you right now that favorable large triggers is the best of the best. Favorable large triggers is the easiest of the easy. But the reality is that your trigger lines aren't always going to be favorable, guys. Life isn't going to set up perfect for you each and every trade. And more often than not, you're going to have what we call split trigger lines, where your large trigger and your synthetic trigger are not one on top of the other. But I want you to remember the lesson. Price returns to triggers. Price comes back to large triggers. Price comes back to synthetic triggers. You'll never know which it's going to be. And that's why favorable large triggers is the best of the best. I moved the wrong thing here. That's why favorable large triggers is going to be your best option with the lowest risk. But let's be real, right? Sometimes those triggers aren't going to be on top of one another. And you're going to have to say to yourself, I have 2 spots where price may return. And you're going to have to say to yourself, I have 2 areas where the market may bounce. And then John, going back, your stop, no matter what, has to go below those trigger lines. It has to go where the market shouldn't go. Can you guys give me a why if you're with me? This is indecision. And that's a tremendous amount of risk. So one of the things that you can do when that entry isn't perfect, when that range is wide, when that risk can be high, is you can wait for that reversal bar, that confirmation bar that says, hey, guess what, Mark? We're going in the direction of the trend. We're moving in the direction of that momentum. We're flying in the direction of that clear path. And now your risk is established. Now your risk is established beneath that reversal bar. So what happens is you take a lot of the risk off. You know exactly where your stop goes. And it doesn't mean that they won't come back, but it means that you don't get run over for $300. You take a much smaller loser behind the reversal bar. And guys, that really is one of the lessons, because life isn't always going to be perfect. It's not always going to be favorable large triggers. But once you understand where the market is most likely to continue, once you can identify where the market shouldn't go, you're 90% of the way there. And guys, that's my first hour every hour. I talk about high probability trend trades. Every hour, every first hour, I talk about momentum. Guys, look at that. Weak triggers to the freaking fib. Down it goes. Holy smokes. You guys knew not to take that long. Isn't that cool? Computer wouldn't let you change date and times in the control panel, but alas, the command prompt got it done. Nice. Morgan, be careful, because if you change your time, your software is probably going to violate. It's a safety feature, and you're going to have to get with Jason to reset it. So if you go back and you try to reopen and you can't get indicators, that's why. Price reached a divergence low. The triggers haven't broken. No short trades yet, guys. Weak triggers, even with a clear path. Look at the push up. Isn't that amazing? Are there any questions about the high probability trend trade? You guys want to circle a tail together? What do you think? Tracy, JK, who else is new in here? Dab Chain, it's good to see you back in here, brother. Is it just me, or did price return directly to support inside of favorable large triggers? Do you see it? Guys, I can't make this up. This just happened 8 minutes ago. That's our look. That's your foundation trade, ladies and gentlemen. That's the one that's going to set you up to get you where you need to be. So I'm going to give you a plan. And this plan is called the KISS plan, guys. And the KISS plan is a stepping stone in your learning journey. The KISS plan is not the only trade, guys. This is your first trade. This is the high probability trend trade, and this plan is designed to optimize your chances of success with this trade. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. What a wordy way to say. Guys, once you can read your charts, once you can talk to yourself in terms of advantages, the possibilities are endless. But you've got to walk before you run. So your simple plan for consistency, guys, don't fight the large chart. Don't fight the momentum on the large chart. Don't fight the termination conditions on the large chart. Just go with the flow. Trade with it. Define your entry for the high probability trend trade, because once you can do that, not only do you know where the market is most likely to continue, but you also know where it shouldn't go, and that's going to open the door for your management. So if you take the perfect short and you're in at the area where the market is most likely to continue, you know exactly where your stop goes, guys, and you're either going to get stopped out or you're going to get one of those magical reversal bars that tells you, hey, guess what, JK? Everything's going in the direction of your trade. Tracy, did you notice everything is trading with momentum and a clear path? Let's reduce our risk 2 ticks above it. Let's make sure that if that small crowd ate their Wheaties, we have the smallest loss possible. And once you make that stop placement, guys, there's nothing else to do. It's either going to get hit and normal part of a positive equity curve, or it's going to go to your first target. So our management is just as mechanical as the entry for the brand new user, because we're learning to read our indicators. We're developing trust. So I'm either going to get stopped out for a smaller loss, or it's going to hit my first target. And for you KISS plan users, one of the goals of this classroom is to teach you how to get paid, is to have you experience that success, to have you feel good and learn to trust the process so that the fear of missing out doesn't kick in. And guys, that first target's only at $100, and that takes one of your contracts off. And it takes you out of half of your position, and you're paid. Money in the pocket, guys, $100, and none of you would step over a $100 bill on the sidewalk. There's no doubt in my mind. And now your new stop is break even. You have nothing to lose, and you've been paid. And guys, is there anyone else in the room outside of me that's taken that $100 and gone break even and thought, I don't care what happens next. I'm holding for the next target because that's what the large chart says. And guys, your second target is only $200 away from your entry, which means that on the highest probability trend trade that you can take, with every advantage, with the perfect entry, if you hit your second target, that's a $300 trade, guys. That is $300 of profits in your account, and you're going to exit that position without a care in the world about what happens next. And you're playing with house money. Amen, Jerry. And here's the deal. You will craft a plan tailored to your personal goals. Ah, thanks, Dab Chain. based on your experience reading the indicators. Guys, once you start to recognize some patterns, you're going to say clever things like, oh my gosh, the large chart has odds favorable momentum and absolutely nothing in the way. Let me hold that last contract just a little bit longer. Let me take it down to that fib. Let me turn that $300 trade into a $500 or $600, $700 trade, guys. And it's always the same trade, the best trade. The variable comes from the contract number or from holding for a little bit bigger, guys. And one of the things that I want you guys to realize is that if all you do is one high probability trend trade a day, it goes to the target, that's a $75,000 a year based on 5 minutes of your time. That's not a horrible thing. If you do a little bit of study, you're going to see the potential for this. And what you'll find is that when you're following a plan, when you're winning more than you lose, it's not uncommon to make $500 to $1,000 a day. The potential is there. You've just got to learn how to use this tool. So I'm going to give you guys this because I want you to remember the goal is to get paid, guys. The goal isn't to show off the biggest move. The goal isn't to make it all in one trade. Billions of dollars a day. Learn how to get paid. Learn how to enter. Learn how to exit. Keep it very mechanical in the beginning. And guys, if you don't know how to read your indicators, if you don't know how to recognize strong triggers, a clear path in the entry, it's going to be difficult. So this is Chart Reading 101. This is designed to have you taking advantage of that section that I built with the rules on it. And this reminds you that taking pictures is how you're going to get to where you want to be. So take 25 pictures of strong triggers. Take 25 pictures of weak triggers. Take 25 pictures of a clear path. Take 25 pictures of a termination condition. And guys, I'm hand to God right now. If you do this, and 99% of you won't, but if you do this, by the end of this lesson, you'll never mistake strength for weakness. And you'll never mistake a clear path for a termination condition. And then all you'll have to do is define your entry. The hard part's over. The advantages are there. The doors are open, guys. But don't just take pictures. Talk about the whys. Get in the habit of annotating your charts, writing out what you see. Because what happens is that if I take this picture, right, and it's called strength, and it's right there in there, and I take the time to annotate strong triggers, odds favorable momentum, this is rule 1 met. Guys, I know exactly what it looks like, and I'm associating this look with the rules. I'm using the language to identify the advantage. This says strong down. Smalls below the large, both are wide. Space between means odds favorable momentum. Strong triggers, rule number 1 met. Is there anyone in this room that thinks that if they take 25 pictures of that and take the time to type it out, that they're ever going to mistake this strong look for this nasty little weakness? I don't think so. But again, I can't make you do it, but that's a great way to get to where you want to be. I'm also going to give you this one as you're taking those pictures. What it means to have a strong top or bottom. It's just a termination condition. And your large triggers pinch and roll from that no triggers through termination. That's a strong bottom. If it happens at a top, we call it a strong top. A strong top or bottom isn't mandatory, but it adds a little giddy up to whatever happens after. You'll never mistake strength for weakness if you go through that drill. You'll never mistake a termination for a clear path if you go through that drill. That's going to open the door for the potential to break that second trade. And you'll never put a limit order up here outside of the window of opportunity because you're going to say to yourself, the market should not go here. This is where my stop goes. My entry is from the area inside of favorable large triggers. And then Tracy, you talked about market replay. Print out this second sheet, guys. Do market replay. Because what this does is it reminds you that if the market's coming from a strong top or bottom, that's a huge advantage, but not mandatory. And it reminds you that you have to have odds favorable momentum, that there can't be termination conditions. And then, guys, even the language, area inside of favorable large triggers on the small chart. I've never had anybody use this spreadsheet and do worse than 70%. And remember, the goal is to get paid. It almost makes sense to follow a plan that's been proven to win more than it loses. And you'll change it as you grow. But guys, if you're on market replay, hit pause. Make sure your rules are met. Fill this out every day. Grab a big Sharpie and make sure that you're marking yes to each and every one of these. I'm going to give you guys all of these. And I'm going to give you one more thing, guys. And this is the one that I really want you guys to take to heart. Before you go live, when you're like, you know what, I've got this entry, I feel good about it, it's time to test my plan on either one of those prop firms or with my own money, there's two things that you have to know, and not just kind of know. There's two things that you have to be committed to and understand wholeheartedly. You have to know why you'll enter a trade. Initially, it's the KISS plan, right? You know exactly why you're going to enter the trade because the rules are met. And then you have to know why you're going to exit. And this is the most ignored part, guys, of the plan. Everybody loves to get into the market. It's exciting. And then once they get there, they have no freaking idea what they're going to do with that position. And I see you guys taking a tick or 2 ticks, or I see you guys getting stopped out in ridiculous spots. You have to have an exit plan. And then you have to commit to having the rules met. This is the most important thing, guys. Your rules are patterns that have been proven to win more than they lose. If the pattern you're trading hasn't been proven to win more than it loses, why on God's green earth are you putting your money into the market? You have to be consistent in action. You have to focus on execution. And then you're likely going to become more profitable because you're winning more than you lose, guys. And it's the process that yields results. It's not your desire for riches. It's the process. It's understanding that momentum and a clear path create advantages. It's understanding that pullback to areas inside of favorable large triggers. So you focus on the execution of the method, and those rules help remove the emotion because you get to the point to where you don't care what happens next. That fear of missing out is alleviated, and you say things like, well, they're going to have to come and get me. If they want to take my money, they're going to have to go where the market shouldn't go. I'm not going to move my stop. I'm not going to arbitrarily move my targets. I'm simply going to follow the process. So if you're in a high probability trend trade, guys, what's it going to take to get you out? Same with a 50-50, momentum, HVA. So I'm going to give you guys this one. Focus on one thing and get good at it. And then add your second. So right now in the room, what I'm going to do, I'm going to give you the spreadsheet again, just in case you missed it. Hundreds of great pictures. I'm going to give you PDF versions of the chart reading 101, of the daily goals. I'm going to give you PDF versions of the exit conditions, of the high probability trend trade checklist, of the KISS plan. And there's even a PDF version of the PowerPoint that I use every day to teach. And guys, I'm telling you right now, you have everything that you need to be successful with Nexgen software. You have everything that you need to win more than you lose. The only thing that I didn't give you, the only thing that Nexgen can't provide you is experience. The only thing that I can't make you do is study. The only thing that I can't force upon you is participation in class. But I'm telling you right now, if you drop a picture in there and you tell me what you see, we're going to talk about it. We're going to make sure that you did in fact have momentum. We're going to talk about the fact that there's not a clear path here. And I'm going to say, Jen, way to not fight those triggers, way to get in on the correct side of the triggers. And with momentum, it's pretty easy to get out at the area. And guys, this is it. And we'll revisit that one a little closer. But that's the path. Are there any questions about anything that I've talked about this morning, guys? Because I'm going to walk away. I'm going to go take 5 minutes. I'm going to stop staring at the market. I'm going to stop trying to sound smart for a minute. And I'm going to stretch my legs. Go breathe through my eyeballs. Do whatever it is I have to do. And then we're going to come back and we're going to start looking at charts. And Jen, I'm going to rip you a new one. Because it's fun for me. Moo-ha-ha-ha-ha. I will pat the dog for you. I didn't have her for a whole week. That was not fun. Fortunately, I had my kids, so it was good. I know. She was with Grandma, though, so she did great. And we're going to talk about this look when I come back. So, guys, after changing the time zone, our fibs don't seem to line up. So Morgan, when you changed your time zone, did you get rid of all the old data to start fresh? Or did you just open it up? Nope. So you've got all that historical. So what I would do is close it, and I would go ahead and do this too. Disconnect and go to database management and go ahead and reset and repair your database too. So let's get rid of all the old stuff. Go through and get rid of your cache and tick and start fresh, and then let's see how we look with each other. Sound good? Okie dokie, artichoke. Guys, I will be back in 5 minutes. Go stretch your legs. If you have questions, post them in the room. If you have pictures, post them in the room. If you've never posted a picture in my room, try to take a picture. Try to get it in there. And if you need help with that, raise your hand. Let me help you. The only people I absolutely positively refuse to help are the people that I don't know need help. So I'll see you guys in 5. Go stretch your legs. Go scratch your dog behind the ears. Back to work. I have no sense of time, so that was plenty for me. I want to talk about what we're seeing on the S&P right now, guys. And I took this picture because when we talk about termination conditions, one of the things, and let me go back to the trading guide because this is pretty awesome. Bum, 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 bum. Uh-oh. That's weird. When we talk about those termination conditions and what they are and what they can be, I didn't mention the midband on the large chart because there's a very specific scenario when the midband on the large chart is a termination condition, and it's when the large triggers are a full bar away. And what happens, and this is it right here, guys, if price accelerates away from those large triggers and gets to the midband, if your large triggers are above that reversal bar marker, that means that this bar will create a reversal bar right here, and then there's still room. Guys, this is when the midband behaves as a termination condition. This is what we call the gap theory. Price very often sucks back to these large triggers. It's not mandatory, it's not guaranteed, but it happens more than it doesn't, which means that anytime I reach a midband and the large triggers are a full bar away, I've got to relax for a second. I've got to let things catch up, because remember, price tends to return to the large triggers. And we also have three divergences right there in the same price range. We've seen that one as well. So this gap theory happens quite a bit. There's a good one. It can even happen off of fibs. Price comes back and hits a fib. Notice that the large triggers didn't follow. It's a big red flag. It says, hey, let's hold on a second. Price is likely to close that gap back to the triggers. And we'll see if we can find a couple of them. Look at all that consolidation. That's horrible. Right through the midband, large triggers are a full bar away. It closes the gap back to the large triggers. So this is the same kind of phenomenon here that reminds us that when we're looking for entry, very often price can return to those large triggers. You can see it even on the tail right there, how it comes back to the triggers. You see here where it hits Fibonacci resistance. You think you have momentum to the upside, and it just sucks right back to those triggers before it goes to the next termination condition. So that's one of those patterns that's worth studying. And if you go to the client trade section, there's a lot in here that are called gap theory. There's a lot in here that say midband is a termination. It's a wonderful pattern to study, to look at, because it really will. Look at this. They're trying. We'll come back to it. Yep, that's it right there, Don. That's what kind of sparked the discussion. And I put that circle there. Hell, I put that circle there 4 minutes ago. And look what it's doing. So how many lessons do we get here? 3 divergences in the same price range. Oh, price returns to large triggers. Gap theory. I mean, guys, I'm telling you. All we're doing is learning patterns. That's it. Is anyone in here old enough? Yeah, I know you're all a bunch of kids in here. To remember when Atari 2600 came out in the 80s, and they came out with Pac-Man, and we were all so excited. You guys remember that? Do you remember that there was a pattern on Pac-Man that if you followed it, you would never die? The ghosts would never get you. And it was a very specific pattern. Same for you Contra players. Up, up, down, down, left, right, left, right. You remember that one? Guys, this is what day trading is. Day trading is identifying the pattern, committing to the pattern, sticking to the pattern, because you know that the pattern makes good things happen. There was one on Galaga where they stopped shooting at you. No, on the Atari 2600. On the Atari 2600, Gino, there was a pattern that you could go forever. I know, because John Novak used to punch me in the back of the head and tell me to get off of it. And yeah, Galaga, Izzy, they would stop shooting. Pitfall, love that game. You guys remember 2600. But everything is patterns. And trading is very much the same. I don't remember it on Miss Pac-Man. Kurt, it was the Atari 2600 version. I had a buddy growing up. His dad was an engineer for Atari. He was part of the software team. And he taught me that pattern. He taught us that pattern. Well, Kurt, you're missing out, man. You could have been a much better Pac-Man player. So I'm teaching you guys the patterns. Learn it. But that's one of the things that people, they recognize. 'Cause I'm 52, right? And at 52, that's what I remember. I remember the patterns that brought me success, because video games were huge. They were at the forefront back then. It was pretty awesome. All right, guys, let's go through and let's look at some of the pictures that you guys have posted in here. And let's talk about what we see and what we don't see, and let's talk about advantages. And it is the Jen show to get us going. She's learning to trade the NASDAQ. And Jen, you had a termination that reversed the market. That's a strong bottom. I absolutely love that. She identifies her momentum. And the one thing Jen didn't talk about is she said, you know what, Mark? I'm not going to talk about whether I have a clear path, whether I have a termination, or whether or not this has the potential to break. So, new users, will you help me out? Is it a clear path? Is it a termination? Or is it one of those potential to break looks? What do you think, guys? The smalls are above, the momentum is present, but the large are still kind of hanging back. Anybody have a guess? Nobody at all. 50-50. Thanks, Wayne. That's right. This one has the potential to break, but it's not broken yet. Jen identifies her areas inside of favorable large triggers. And because it's the NASDAQ, and Jen, this is that lesson that you're learning. When you get to these areas, the small triggers are close. They are so close. This is where it's not the reversal bar that gets you in, but rather the close on the correct side. Does that make sense, Jen? It's not the reversal bar that gets you in, but rather getting to the correct side of the small triggers. Because a lot of times, these trigger lines can behave as resistance. It's a beautiful trade, and you get out of trouble. I love the trade. But I know that you're working on that one. And then this one, we talked about it as well. There's your 50-50. And the entry comes from the reversal bar on the correct side. And here's a great example of why, this is for you NASDAQ traders, why we insist on the close on the correct side. Do you see it right here, Jen? They fooled you completely. And if you got in on the reversal bar, you got run over. But if you get in on the close, down it goes. Nice trading. And did we clear up the reversal bar thing for you a little bit? Awesome. Good stuff. And then I think that's the same picture. So I'm going to scroll back up and let's go to the next one. And guys, I'm telling you, anytime you post in the room, we're going to find a way to create a lesson from it. That's just what we do. And let's see what Pete did. And if you have questions about anybody's charts, guys, feel free to ask. Pete, odds favorable momentum. You get to the other side of trouble. You exit with a loss of momentum, and you say, wait a minute, trend trade. Absolutely beautiful, Pete. Great trading. Momentum, potential to break. He takes a chunk with the momentum down to trouble, gets in on the trend trade with the potential to break, and he knows where his trouble spot is, and he gets paid right at the trouble spot. Do you guys see it? And JK, Tracy, all you guys that are new, I want you to look at this look. Momentum, momentum. Get below the fib, take a chunk. And then when the momentum fails, these typically turn into trend trades. Oh, and there's the second half of it. Nope, you posted this one too. Jen, you're all over the place. Can't hang on, Jen. I got to keep moving. Got to scroll back to the top. Pete, great trade, dude. Great trading. And guys, one of the things I want you to see on Pete's trade. Oh no, where'd it go? Hold on. One of the cool things about Pete's trade, and this is one of the great things about what we do. While all the stockholders, the stock traders are like, man, I sure hope this goes up. Pete says, check it out, Mark. I'm going to go from 75.53, I can't see what that one is, 43, and I'm going to make $400 on this move. And then I'm going to get back in at darn near the same price, and I'm going to get paid twice in the exact same range. because I have an ability to read my charts, understand advantages, and I know exactly where the market is most likely to continue. And guys, that is the goal every day. And one of the things is I'm not just the educator, guys. I'm also a member. There's the one that we did the bar by bar on. I took that trade. Gary took the same trade. All the momentum, everything says down. Pull back right to resistance inside of triggers. All the way down to the fibs. Gary, rock star. And what's cool, guys, is when you start seeing 10 different people in 10 different time zones taking the exact same trade. Guys, this is one of the things for you new users. This is where that trust comes from. You'll walk out of my room within the first week and you'll know that this works because you see people taking these trades that fit the rules. Your job is to learn how to work it. That's it. Terminations everywhere. Terminations. And Gary says, dude, just wait. That's not my money. I don't have to go short into all these lines, even with odds favorable momentum. Absolutely beautiful patience, Gary. Great job. But guys, I'm telling you, it works. You just got to learn how to work it. There we go, Jen. And out at trouble, right at the mid-band. I like it. Exited at previous divergence. Almost. But let's look and see how much that lesson that we had today could have added to this trade. The difference between, well, I can't see it. It's behind a fib. We'll call it 2007. So 7 points, $140 versus getting in at 8. Yeah, add another 20 to it. Nicely done, Jen. And guys, when I go through these, sometimes I go through them pretty fast. If you need me to slow down, if you need me to go back, if you want to revisit, say the word, guys. I don't have a time frame. I don't have a syllabus. I literally just want to make sure that you're getting what you need out of this. Don't be shy. Pete, everything says up. And notice that Pete says this, guys, and this is huge. Pete says triggers rolled up, they're separated, big mo, which is big momentum. And then Pete says to himself, well, I don't have a clear path. So going into the trade, he knows what his problem is. And then Pete says, all right, let's see. I've got split triggers, right? And I'll get in close to those synthetics because it's going to give me the least amount of risk. And I know right where the trouble is, and that's it. And daily goal met at 5:45 a.m. Does it work? Hell yeah, it works. $1,700 at 5:45 a.m. Pete, I hope you golf or something because you're getting really good at this stuff. Gary, termination, all the terminations. Momentum short termination areas keep you out of the trade. Perfect. Once again, taking pictures when the rules aren't met really reinforce, guys, and they help you realize. And then Zorro, I mean, just making it look easy, right? All of the momentum, the potential to break, the perfect entry, and the outstanding exit. Zorro, beautiful. Yeah, it is. You know, I've got a good friend of mine, Pete, that I golf with. I think it was last month he had to do it. But he's got his tee time where they do the waste management. He's going out there for his birthday. I want to say end of this month. I want to play that course too. I was too busy in school and broke back when I lived by Scottsdale. So JK and Tracy, and who else is new in here? Let me know. Yeah, I think it was $300 for the tee time, but that's bucket list, right? Does everybody see the momentum? Does everybody see the potential to break? And guys, when we talk about great entries, create manageable trades, after this reversal bar, there was $30 of risk on Zorro's trade. Yeah, it is warm in February. When's monsoon? That's November. I moved to Phoenix right in monsoon season. I was like, I thought it was supposed to be sunny all the time. Absolutely beautiful trade, Zorro. Let's see where we're at. Dun, 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 dun. And I like sound effects. Pete again. Ugly large chart. Smalls down, large up, no momentum, no clear path. And guys, letting the large chart lead the way. And Pete is one of my biggest advocates for this. And I'm telling you, listen to him. When the large chart isn't giving it up, don't look at the small chart. When the large chart doesn't have momentum, don't look at the small chart. When the large chart doesn't have a clear path, guys, it's okay to not look at the small chart. And all of this nonsense is avoidable by letting the large chart lead the way. Thank you for posting that again, Pete. What you guys will find is that you will learn from one another in this room. You will learn from other people's pictures. You will learn by seeing momentum over and over, by seeing clear path over and over. And guys, this is a fiery momentum stack triggers base hit. And Ron C. created this trade. And he did it from his ability to understand momentum, from his ability to understand a clear path that he learned in the high probability trend trade. And Ron C. used to give me heartburn every day because he never waited for a pullback. He just said, with this much momentum and nothing in the way, I'll capture $110 or so, and I'll wait for the next one, guys. And base hits pay bills, and nobody does it better than Ron. I learned from you guys. Gary, your charts are so hard to read sometimes. Termination condition, triggers roll, so it's a strong bottom. And you entered without a lot of room. And that would be the only thing, Gary, is you got into this move late, right before the fibs, didn't give yourself a lot of room to make money. After the termination, after the triggers roll, there's your white bar. Your entry was down here at 70, and then your exit is perfect. Just late on the entry. Sometimes we have to go for coffee. Uh-oh, Jen, I think we have a dud. Sometimes when I clear these out, it makes it easier. Let's try it again. There it is. Termination, odds favorable, and in late, out at trouble. Nice. Very nice, Jen. All the momentum and haven't reached the area, and she takes a little chunk. Guys, I think everybody in this room is probably going to end up taking this trade eventually. Holy Zorro. Everything says down. You wait for trouble to clear, and it's going so fast it slips you. And out at trouble. And that's about the easiest $180 you're ever going to make. I wish we could see the timestamp. I bet that took seconds. And Big Dog, one of my favorite phrases in here. This is the look I have confidence with now. And you guys are killing me with these, showing me 73 hours worth of stuff. So everything says up, coming from a strong bottom, not a clear path. Right, Big Dog? You do not have a clear path. But you take the pullback to support inside of triggers, easy to identify where the market is most likely to continue, and it allows you to take 200 per contract. Absolutely beautiful, Big Dog. Rinse and repeat, man. Rinse and repeat. That's it. And then Morgan. Odds favorable. 50-50. Strong bottom. No divergence, but it didn't get you. One divergence. Perfect entry. And then Morgan, So one of the things that it says on the KISS plan, if you're a KISS plan trader, is if you're trading 2 contracts, get paid at trouble. In at 92, make your 70 bucks and then tighten up, right? And then you exit with the second divergence. Nicely done, man. Making something out of nothing. But you got the first one at 100. Beautiful. So you made sure that you got paid. Because it's not high probability. And what's the goal, guys? Get paid. Say that to yourself every morning. My goal is to get paid. My goal is to make money. My goal is to be in the best trades with the highest chance. Joel, odds favorable. No clear path. It's one of those 50-50s. Divergence. And Joel says, man, I'm just going to try and get it quick because it's not perfect. And notice that it pulls all the way back to those synthetics. Beautiful trade, Joel. Nice management. Really well done. And then because I love a broken record, check it out, guys. Odds favorable. Clear. Same old 11 tick preset. Under 30 seconds, base hit. Ron's batting 1,000 this morning. Joel, termination. What a great picture. Know what you guys should do? Copy that picture. Go to your spreadsheet. Drop it in there. Commit it to memory. What do you guys think? How much money did Joel lose trading into that termination condition? How much did he give back to the market? Anybody? Not a darn cent. Not a darn cent. Yeah, Ron, your trade did give John the heebie-jeebies until I taught it to him, and then he's like, oh my gosh, this is easy. And this makes sense. But his brain likes to be a little more complicated, I think. He likes to overthink. All right, let's see what Pete's up to. Strong triggers, everything rolls, odds favorable. And Pete says, all of this nonsense right here, that's not my money. That's not the best look. This isn't my highest chance of success. Let me take that momentum and get to the other side of trouble and just roll that mofo down and add an extra $520 to my already outstanding day. Wonderful, wonderful work, Pete. Oh, we saw that one. And Pete says, you know what I love about futures is I can make it both directions. Great job. Odds favorable, potential to break, right back to support. Guys, this is the one that when it happened, I was like, look, did anybody get it? And Pete said, hell yeah, I got it. I studied, Mark. I did my market replay. All right, let's see what we have here, Jay. STFOM got stopped out twice for a loser. So 2 things here. Jay, are you with me? I want to make sure that you're in here because I want to talk about this. Jay's like, oh, shit. Since I can't see your entries, I'm only going to open up this chart. One thing you didn't do is you didn't show me entries, Jay. But I feel comfortable saying that you got stopped out on pullbacks to areas inside of favorable large triggers. So we're going to go back and we're going to take a look at this at 10 a.m. I'm going to put you on the spot a little bit. So your first stop out, Jay. Bum, bum, bum. Whoops, sorry. I know. So hold on, let me pull up your picture. Where the heck's my internet? There it is. Your first entry was at 76 and you got stopped out at 74.25, which means your entry was right here and your stop out was right there. Does that make sense? You entered hoping that the market would go up, and then when it didn't, you got stopped out right at an area inside of favorable large triggers. I want to make sure that that makes sense to you, because what happened is you tried to take a momentum trade, which is okay. I love momentum trades. But you forgot that this reversal bar says this is your most likely entry. So what you did, Jay, is you put a stop at an entry point. And remember that phrase, stops go where the market shouldn't. So if you were going to hold this one, your stop belonged all the way down here, would have kept you in, ride it up, make some money. Your second entry, was at 81, and you bought all the way up here. I'm not sure what that price is, but you bought at the top, and then you got stopped out twice. And I feel comfortable saying that you're not waiting for pullbacks to areas. Does that make sense, Jay? So the lesson on this one is, dude, you had momentum just dead to rights. You had that clear path. Everything was perfect. And the only challenge was that fear of missing out. Jumping in rather than waiting for the pullback. And it would have changed your entire day. Does that make sense, Jay? I love your large chart read, dude. I think your large chart read is absolute rock star. And I think that the only challenge was, man, let's work on that rule number 3. Let's use that language. Pull back to an area inside of favorable large triggers. And when you go back and study this one tomorrow, go back and take the picture, right? Take the exact same picture and use that language. I had odds favorable momentum. I had a clear path. And remind yourself, I need to wait for the pullback to an area inside of favorable large triggers. Turns my loser into a huge winner. And guys, this is one of the things. It's okay to go back and re-annotate charts. It's okay to type that out, because Jay, I promise, and props to you for putting it in the room, you're going to remember this conversation. You're going to remember the typing. And tomorrow when it's time to take that trade, and right here where you start chomping at the bit, you're going to be like, oh man, hold on. I'm just going to wait for that area inside of favorable large triggers, because I know that's where my least risk is. I know that's where my best profit potential is. Great job, dude. I think it's a perfect large chart read and just a minor tweak to get you to the correct entry. All right, Jen. Termination. Triggers roll. Momentum is there. The path isn't clear. And Jen says, you know what? This is the NASDAQ. And the NASDAQ is kind of a pain in the butt. And when these small triggers are screaming up against me, my best chance of success with this look comes from the other side of the triggers. And Jen, you did this beautifully. And you said sold as no divergence. Jen, are you... Do you not see it? Am I seeing things? Okay. And you're thinking, entered his price on large, went back to the large triggers, you let it close the gap up to the synthetics. I love it. Okay, cool. And then bought at divergence. Somewhat just a read on triggers. I don't know that this is just a read on triggers. I think that this is great. So let's start large chart. Large chart had a termination that reversed the market, right? Strong top. We know that's great. Large chart had odds favorable momentum. That's outstanding. This is a market that's likely to continue in the direction of the trend, and the red background lets me know that the trend is down. Jen understands that if she gets a pullback with this look, it might go here and it might go here. And Jen said, well, I'm not just going to jump in arbitrarily with this much space and I know where my stop has to go. Let me insist on a reversal bar. But more importantly, let me insist on a close on the correct side of those small triggers. Jen, I think what you did is you took beautiful advantage of a termination condition, of a trigger roll, of momentum. You showed amazing patience on the entry, and you recognized that 86 is a problem area. So you looked for some sort of sign that says, whoa, this doesn't appear to be following through without trouble. I'd love to tear it apart, but I don't know that I can. So just virtual high five. But this is one of the great things about the classroom, guys, is sometimes you're going to think, oh man, I jacked this all up 10 ways to Sunday. And then I come in, I'm like, wow, Jen, that's actually really nice. Good job. Very nice. And then my other favorite broken record, other than me, price cleared fast. Triggers furious base hit. This same darn trade, guys, over and over and over. And one of the things that you're going to recognize the more times that you spend in this class is that the most successful people in this room are doing the same darn thing. They have one or two trades that they've got confidence in. They trust them. They believe in them. And they take them exactly the same way. And guys, variety is not the spice of life in trading. Variety means that you're probably breaking your rules. And what you'll find is that your best days are going to be 4 or 5 trades that look exactly the same. Your worst days are going to be 25 trades that all look different. Ron, great job. Awesome consistency. All right, Tracy, I'm so excited. Here we go. Scissors, bars below. Doesn't even matter about the bars. They're wide open. The path is clear. The synthetic and large are trending close. I love it. And you get in right at the area. Stop where the market shouldn't go. Everything's beautiful. The only challenge is that 75.37 has the potential to break, Tracy, because the smalls are through and the large are not. But this great entry gives you room to get back to trouble. How did that one turn out? How did that one turn out for you, Tracy? Winner, winner, chicken dinner, right? Nicely done. You hit your second target. $200. And you've been with me for a week? 3 days? 2 days? And you're already keeping it simple, guys. You recognize it's 50-50. You identify momentum. I mean, beautiful. Welcome to Nexgen. You're going to be stuck with me forever now. I hope you like the sound of my voice, because this is just the beginning. I love it. I get excited when I see new people keeping it simple and finding money. And Jen, we already looked at this one. And we already looked at that one. So I'm going back to Tracy. Oh, there it is. So Tracy on a 50-50 trade. Large hadn't broke but got greedy. Moved to stop to make 100. Stop for 200. Should have left the limit at 75.30. I agree. Well, Jen, it's afternoon there. You probably had a pint. It's been about 4 weeks, Tracy. Right on. So one of the things, Jen. So one of the things, Tracy, and I'm teaching a friend of mine to trade right now, and one thing that she does every day is she moves her stops, gets jumpy, freaks out. Oh my gosh, moves her stops. I'm going to give you, I don't give trading advice, Tracy. I refuse to. I won't tell you how to trade. But what I will tell you is that magic word right there, sim, means absolutely nothing bad can happen to you. You can lose $20,000 and it won't affect your quality of life. So one of the things that we're doing right now, ladies and gentlemen, is we're learning how to enter the market. We're learning how to take trades. We're learning how to recognize patterns. And I'm going to show you something. I just went short 100 contracts into support, Tracy. And I'm down $5,200. And the only thing that happened is I know that I shouldn't be trading into big blue lines with the triggers above. So get to the point to where you let these things ride out, guys. Just let it happen. Take the trade. Leave your targets because you're training yourself to believe in it. And Tracy, the one thing that I want you to take out of that is that you robbed yourself of $100 on that trade. And I want you to say, damn it. And I want you to be mad about it. I want you to say, you know what? I robbed myself of $100 on this trade. And if I do that thing for every trading day this year, I'm 25 grand lighter than I should have been. Associate your emotions with bad things. Learn to do it, man. You had no reason to exit. Great trade. Great trade. Total new guy worry. No, you can't do that. Don't call yourself all kind of names. Be nice to you. But it's okay. Say, damn it, I broke my rules. I broke my exit rules. I've got to make sure that I not do that. Because one thing that pain in the ass says to me every day is I have to know why I'll enter and why I'll exit. And I've got to be consistent on it. I've got to be consistent on following that plan. So great job, dude. Great job. 4 weeks in, calling great trades. I need to see that green check mark next to your name. You got this. Now we're just going to build it. Zorro says, Mark, I heard you trying to help the new kids. Let me show you real quick. So when we have odds favorable momentum and a clear path, I don't want to jump in up here, Mark. I want to get in a couple ticks above support. And it's kind of in between the triggers, right? You could have used the line, got a couple extra ticks. You could have waited for the reversal bar, got almost the same entry. But Zorro says, with this look, we're more likely to go up than down. Let me make some money. Great trade, Zorro. And Pete says, well, you know if Zorro can do it, odds favorable with the potential to break, let's get in a mid-band right at the top of the triggers. Let's take it up to the trouble area. Let's make $2,800 today, 7:44 a.m. Pete's just bragging at this point. This is Pete encouraging you guys. Learn your rules. Follow your plan. Pete, you only have to make $900 tomorrow. You should be showing off. You're a badass. Look at that entry, guys. Like a sniper. Do you guys see that? Did you ever think you'd be able to call your shots like that in the market? It's freaking outstanding. And if you can't do this yet, let's work together so you can. Pete, I'd be showing off too if I were you. I would be dropping microphones. Odds favorable, clear path, strong triggers, beautiful entry, great place to take money. Joel, perfect. Now to find a tea time. Who was this? This was Zorro again. Zorro goes, check it out, Mark. All of this momentum, let me get above anything that could create a bounce, and let me take it right up to the place that could create a bounce. Great job, Zorro. And then what happens here, though, is directly into a termination condition. Zorro takes the entry, gets quick paid, but man, termination creates a fight. There's the fight. It's hard to make money in a fight, isn't it? It's hard to make money. If you're throwing hands with somebody, he drops a nickel, you're not going to bend over and pick it up. Let the fight end. Great job, Zorro. Great trading. Hey, Ron, have a great afternoon. Take the money and run. You might. Depends. Morgan. Morgan's a bad mother sucker. He's like, man, I'll fight and pick it. Yeah, maybe a buffalo nickel. Fair enough. I'll take the beating for the buffalo nickel. So guys, that is the second hour. Look at that. Termination condition didn't work. And my wife still loves me even though I'm down $5,000 for $10. And this drives my brother nuts. He goes, dude, don't leave that up there. They're going to think you can't trade. I can't trade. I went right into termination conditions. But remember, simulator is your safe spot, guys. Simulator's your cry closet, whatever the kids call it today. This is your trigger killer. This is, I mean, guys, simulator, break everything, make mistakes, find challenges. Jen, strong bottom, thank you. High squats. Odds favorable. There's your gap theory, right? Comes all the way back to the synthetic triggers. Entry at reversal bar marker. Jen, are you sure? Well, where's your first reversal bar? It's right here, right? I love it when such brilliant people have little challenges because it reminds me that it's okay. Not even, that's right in the middle of the big bar. So, Jen, I'm going to do this. That's your reversal bar, right? All right. Oh, I see what you did. Guess what, Jen? You just took the rules from two separate trades and tried to turn them on each other. Because what kind of trade is it that you took? You're just taking a trend trade, right? So where's your termination condition? Where's the problem? There isn't one. So you're taking a trend trade, which means that this one-to-one, who cares? Areas are defined on the large chart. But what you did is instead of getting it at the best spot, right? Instead of getting it at the best spot, Jen, you said, oh no, in order to take that momentum trade thing, I've got to be on the other side of these one-to-ones. But there's your trend trade right there. You took momentum entry rules and momentum trade rules over here, and you spliced them. You created this little bastard child, little Frankenstein. And that's one of the things that happens when you're learning. No, it's okay. It's totally okay. This is one of the things that happens as you learn. The more trades you add, the more you have to know exactly what you're looking for. So Jen, you see how this was your real entry? Because you were looking for a trend trade. If you were looking for the momentum trade, I like it, right? That little snippet makes sense. And I'm going to tell you right now, I'm not mad about you taking this. What a great trade. Quick $100, beautiful, absolutely. But this was your entry. And notice that it closed the gap to the synthetics the way we anticipate. That was perfect. Great job. And guys, I try to be real warm fuzzy when I give feedback. I know not everybody takes it as well as some people. And that's it. Keep practicing on the NASDAQ. So define your trade. And I think this is one of the things that I don't talk about enough. Define your trade, right? And let me go back to this one. When you're ready to take a trade, you should be able to tell yourself if you're taking a high probability trend trade. You should be able to tell yourself if you're taking a 50-50 trade. And you should be able to tell yourself if it's a momentum trade. And this just comes through repetition. But once you define what kind of trade it is, well then those are the rules that you're adhering to. And then once you enter, you know how you're going to exit. And the more trades that you add, the more difficult it becomes to stay consistent. In a different life, I used to road race motorcycles. And there was a gentleman named Keith Code. No, Jonathan, I'm not saying that at all. I'm saying it's two different kinds of trades. Know the rules for your trade. It's a trend trade. Yeah, Wayne, I didn't realize you were in the room. There's a gentleman named Keith Code, guru for motorcycle racers, guys. And one of the things that he talked about was having $10 worth of attention in his book. And I want to show you how this works. So, Jen, you used $8 to talk about the strong bottom and the odds favorable, right? And you're cashed in at this point, and then you're throwing all of this attention, and you're trying to figure out if it's a trend trade, if it's a momentum trade, if it's this trade, if it's that trade, and what you did is you kind of caught the second half of it. And I'm just using Jen's as an example, and this is a horrible one to talk about the $10. But what happens is a brand new user, it's going to take you $10 worth of attention to figure out your entries. And that's why they're so mechanical. But eventually, you're not going to have to think twice about momentum, and there's no cost. And you're not going to have to think about clear path, and there's no cost. And you're going to get so good at your entries for that trend trade that there's no cost. And that's when you add the second trade, because you're no longer spending any mental resources to find the high probability trend trade. But once you add this trade, guys, you've got to be able to separate it from the previous trade. You've got to be able to separate it when you add a momentum trade. And you've got to be able to break these rules apart. And it takes a lot of attention. So the more trades you're trying to take, the more likely you are to make a mistake with the rules if you're not 100% and it's committed to second nature. Jen's learning to trade the NASDAQ. And Jen, this didn't even fit the rules for a momentum trade because your smalls are on the wrong side of the large because your bars didn't clear the problem, right? So this is Jen saying, oh shit, it's a trend trade, but wait, let me do the momentum. And it's okay. And it's totally normal. But the better you know your rules, guys, the less likely you are to begin to put them together to make mistakes. I know, because you're learning something new, right? But do you see how a week ago, Jen, you didn't second guess anything. You were so confident with everything that you were doing. You knew exactly where to get in. You knew exactly where to get out. And now you're adding things, and it creates a little bit of confusion. And yeah, Jonathan, so it was a trend trade that got turned into something else. So this would have been my entry right here. I might have taken my first profits there, second profits up here at the treble, but I wouldn't have given all that away thinking momentum trade. Does that make sense, Jonathan? But I'm telling you guys, it's totally normal. Totally normal. Every time you add a trade, you open the door for a little bit of confusion. Yeah, that's okay. It's okay, Jen. Oh, I will always help. It's what I do. I enjoy it. And Wayne's like, Mark, you totally butchered the Keith Code thing. But it is. There's a cost associated with what you're looking at. Get that cost down to zero before you add something else. Make it second nature. And you'll find that it comes easier. So, guys, I'm learning new stuff right now. I'm sure you've all gotten the emails and you've seen the sign up for Janesh and Safia's class using supply and demand and stuff like that. That's it, Wayne. Write down your rules and follow them. So I'm learning that because anything Nexgen offers is something that I'm going to learn. And I'll tell you what, my brother is just over the moon with it right now. And this morning, Jen, I did exactly what you did. I tried to take my plan and I tried to incorporate the new stuff that he's sending me little half-truths on. And I totally screwed it all up because I don't have everything second nature yet. So I'm excited. I'm taking the class. I'm excited for you guys that are taking the class because I'm seeing a lot of great things with it. It's not something that I will teach in this room, guys, just so you know. I know when John Novak has classes, everything trickles into the chat rooms and you get it for free. I am going to be signing a non-disclosure to not teach this. So don't plan on seeing it in this room at all. I won't be posting my trades. I think it's 8 in each class, Gary. Salespeople have more information than I do. But the one thing that I do know is I've been watching Janesh trade for the last 5 years. And I caught Safia as a brand new user, and she learned the high probability trend trade, and then she morphed it into these beautiful trades, and she takes huge runs on the NASDAQ. I'm excited about it. It'll be fun. It's funny, I seem to be in a constant state of either learning or teaching, and I never get to do my own trading anymore. I know how my brother felt. Terminations, guys. Pivot stop out right at resistance. You guys want to see something cool as far as patterns go? I want you to see this. I love this. So I'm going to take this picture right here, and then I'm going to go to the termination condition section. And I'm going to take this picture, and I need to talk to my brother about how these don't center. And I'm going to put these two pictures side by side, guys. One of them is from right now in the S&P. The other one of them is from, I believe, 2021. Close. 2021 in the S&P. Price gets to resistance, retraces all the way back to support in the mid-band, creates a pivot stop out at resistance, and that's what starts the reversal. Do you guys all see that? Because when I talk about learn your patterns, this is it. And you know what's cool is that if you've burned this into your memory, you might already be short. Saying, man, when I get a pivot stop out at resistance, this has been happening for freaking years. Maybe I'll take a shot into support from the best of the best spot, and I'll manage aggressively. But that's how you grow outside of the basics, guys. It's not because you've taken 1,000 high probability trend trades. It's because you've begun to recognize the patterns and you begin to see these things happening over and over. And I love it when that pattern happens, and it happens a lot. Into support, big dance. Eventually everything rolls and down it goes. That's the NASDAQ. Remember when I said rule number 2 will keep you out of the market? Rule number 2 will keep you from taking trades. Rule number 2 is the 90%. Ladies and gentlemen, crude oil is range bound. And it hasn't been able to break an area for the last 40 minutes. Isn't that crazy? And none of you had to lose any money in there. So guys, I'm going to go stand up. I'm going to go stretch my legs real quick. I'm going to do it again. I got to do this every now and then. Too much hardware in my back not to. When I come back, the room is yours, guys. I'm out of pictures. So I need questions. I need, hey, Mark, let's talk about this. Hey, Mark, I need you to cover that. Hey, Mark, I heard you're a great dancer. Can you find a video? Not really, guys. I am not. But something. Give me something to talk about when I come back. I'll see you in about 4 or 5 minutes. Didn't they? So what do you guys think? Odds favorable momentum, right? Does everybody see it? Give me a Y if you see it. We have a clear path. All I need is that, oh, darn it, they hit support. They hit support. And now I got to pause. Now I got to say, wait a minute. I don't have a clear path. Let me hold on for a second. If you are Ron C., you had a beautiful momentum trade right in here. You got it for 600, Jonathan? Did you catch it from up here? Nicely done. Nicely done. Where'd you get it from? I tell you what, I'm going to stop guessing. You can post a picture. I can't wait. Can't wait. Miss Jen, what did you do? Loss of momentum. My question is, as you pointed it out earlier, smalls on small above the large, so need to wait until small's below, right? So Jen, what kind of trade are we talking about? That's the biggest question. For a momentum trade, absolutely, you'd want to have momentum. That's not it. For a trend trade, those smalls can be wherever. Who cares? As long as I have areas inside of favorable large triggers or inside of triggers. So this is where you have to ask yourself, what direction did you want to go? Short? But do you see how, Jen, it's easy to begin to confuse multiple trades? So you've got weak triggers and 3 divergences. You shouldn't be looking for anything short. Yeah. You don't have areas inside of favorable large triggers. It's too soon for a long. Total holding path. Total holding pattern right now. One of the things that aggravated me so much, exactly, when I first started, is my brother would say in the classroom, it's obvious. It's obvious, isn't it? Jen, it's obvious. And guys, nothing is obvious until you do the work to make it obvious. So I love these questions. You'd have to wait for a short, not until the smalls are below, but until your path is clear, until everything agrees. Yeah, good stuff. But ideally, I see what you're saying, and yeah, I would want something. I need this to break a little bit. Good job, Jim. Keep them coming. Keep those questions coming. Morgan, you took the perfect trade, my friend. You took the perfect trade. Strong top. Odds favorable, potential to break. You get in at the right spot. Your stop makes sense. Big sad. Don't be big sad. Did you follow your rules? Yeah, you did. So Morgan, are you going to win every one of them? No. That market's been going up all day. They're just fighting a little bit. That's Murphy's Law. I know, it's Murphy's Law. You took the perfect trade. It made sense. They just got you. But check it out, Morgan. Something that I think about when I'm looking at these 50-50 trades. And guys, excuse me one second. I'll be back in literally 30 seconds. All right, guys. Sorry about that. So Let's check it out, Morgan. 83.25 isn't broken, right? 86 isn't broken. 86 and change isn't broken. So I literally have, and these are things that I think about, and it doesn't really fit its way to the rules. I have this much space that I'm hoping breaks. That's a lot. That's a lot of areas. That's 3 areas that I'm hoping break. And they're not stacked one on top of the other. There's a huge gap. There's a 5-point gap. Or no, 3-point gap in between a lot of it. And it's just not the perfect look, right? I love one area with the potential to break. And I kind of take that into consideration. One area with all that momentum, I'm cool with, right? Even 2 right on top of the other, I'm cool with. But once you start stretching stuff out, let me see if I can find another example of it. This is a good example too. It's one-to-ones, it's a divergence low, it's a fib. So there's all sorts of, I'll count. If they're stacked, I'm pretty good. If they're really spaced out, I'll sometimes force my large triggers to get below the higher areas, so I only have one area to break. I hope that makes sense, yeah. Jonathan, you have a new trading computer. TechSmith is not on it yet. Give me a while to post. Yeah, no working. No problem. Do you want the link? Just maybe pay attention to it on those 50-50s. Go back and look at some of your 50-50s that didn't work and see if there's that common thread where it's a huge gap. Dude, your trade was perfect here, and it sucks when the good ones don't work, but the good ones don't work sometimes. I got you coming, Jonathan. There you go, bud. And one of the things, did you ever notice that, Morgan? One area not broken. That's the best of the best. One area not broken. Because sometimes, so let's think about it. It's the same reason we see them retest areas or retest the fib right behind it, because a lot of times they were going here, not here. So I don't know, just something to think about. These are the things that rattle through my brain. Yeah, not a good top. 50-50. Just going to keep posting 50-50. Not a strong top. Entry, mid-band, not quite area, inside, favorable large triggers. Sell at the trouble spot. All right. So, Jen, why did you get in on the reversal bar? So I think what's going to help you, and this is for all you NASDAQ folks. You didn't, Jen. There's your mid-band. There's your entry. And your entry is a tick below the reversal bar, which means that you probably waited for the reversal bar. If you were in at the mid-band, you would have been in up here, right? You're in right there. On the way down. Get over there. So your mid-band was 25, you're in at 21. So And that's okay. That's cool. And you've got $100 worth of potential. But why didn't you enter at the mid-band proper? Small triggers were a full bar away. Do you see it? And this takes practice. This does take practice without a doubt. And then Jen, remember when you said I have to be on the other side of the one-to-ones? And now you don't have to because you remembered that it was a trend trade. So that's awesome. You didn't let these affect your decision making. No, I see kind of everything. And then great exit right there at trouble. I like it. But this is the one it looks like you, did you get in with a sell stop? Or did you hit sell now? Because it wasn't a limit order. Okay, just sell now. I got you. So you'll refine this a little bit. NASDAQ's fast. It's hard to. It's hard to see everything. Especially that timing takes practice. With the small triggers a full bar away, absolutely sell at the mid-band. And sometimes you may have to hit sell now instead of a limit order. So let's go to the NASDAQ real quick and see what's happening. Not a lot. So you may have to hit sell now if they're a full bar away. And now it's just kind of wonky, right? And see how they weren't a full bar away? So if you thought you were going to go long, that close on the correct side just saved you. No reason to sell now. Here, they were a full bar away, so if you decided to just get in at the area, you had time. Yeah, the large chart is absolute crap. Smalls are above the large, but we need those to roll, right? It looks like it wants to go up, but it still has some work to do. Good stuff. What do you guys want to talk about? I see a lot of you guys back in class that I haven't seen in a while. Nice to see you, Anna B. We got Phil H in here. Samuel's always here. Clara's hanging out. She's been quiet. Nice to see you guys. Michael S. is back. Spice is here. Heck yeah. Sir Randy. Or C. Randy. It might be Yes Randy, not Sir Randy. I'm not sure. Danver, nice to have you. What would you guys like to talk about? What can I do for you? Everyone's like, oh shit, he's asking. I better jump ship. Man, Jason's in here. Nexgen Tech is in here. Cam is in here. I like that. Hey, David. Man, I have been absolutely outstanding amazing. I live a better life than I deserve. There's no doubt about it. Jason is amazing. He doesn't always jump into class. It's good to see him in here. We're just waiting, right? I'm waiting for that darn momentum. I sure do like momentum. Look at that. Termination. Aw, thanks, Jen. Life is good. You guys remember the gap theory? I like when you come in, Jason. Do you guys remember the gap theory? If price accelerates away from these large triggers and smacks into something, it may close the gap if they're below that reversal bar marker. 73.27 is the exact price where this bar becomes a reversal bar, and those triggers are below it. What that says to me is that if I'm tempted to trade into all these termination conditions, this may be a good reason to pump the brakes. This might be a good reason to just pause for a second. While you guys think of questions, I'll circle it. We'll see if it comes true. You just got your ass kicked on the ES, minus 400. Jay, show me the picture. I don't believe you. Show me your entry. Show me your exit. Show me what you did. Maybe there's a way to do it better. I appreciate that, Fel. I agree. You know, John Novak spent decades in the service industry. He's been focused on customer service for as long as he's been making money. I did the same thing 30 years. And neither of us are introverts. So you take that combination, it works out. You know, Jason and I worked together in the restaurant industry 20 years ago. John came in and stole half the crew there to come work for Nexgen back in the day. Worked out. Jay, are you gonna show me that picture, or you want me to go to the ES and just guess what you did? That'll be fun. Hang on. I like it. I'll tell you what. If you took this one, good on you. That's a great looking spot. It just didn't work. If any of you took this trade right here and lost, you took a good looking trade. It just didn't work. And there's 100 things that I can say about it. Morgan, remember when we said the smalls have to smash through an area? All right, Jay, I need you. We're going to learn how to get pictures of your entries too, brother. So what did you do? You jumped in again, right at the bottom, no room to the target, and then you held it for too long. And then you got back in the right one and got stopped out. So Jay, your second one, dig it. No worries, right? And then this one, remember that gap theory that we talked about, Jay? If you hit a mid-band and the large triggers are a full bar away, that's a very avoidable loss. That's a gap theory. This is just jumping in, totally cool, and not respecting the one-to-ones. Man, you've got this very clear target, Jay. I always have an idea, Jerry. Hold on one second. There it is. Jay, does that make sense? You had momentum. Everything was down. Just get paid at the line. Wait for the next trade. There's nothing wrong with that. So, Jerry, doing the reset historical, you're going to have to disconnect, but this typically fixes it. I dropped the picture in the room as well. And I think this is one of the things where when you start to develop trust, Jay, have a good one, but this message is for everybody. When you start to develop trust in the software, when you start to develop trust in these terminations, it becomes easier and easier to get paid at these lines. It becomes easier and easier to say, you know what, this could stop the market. Let me stop. Good job. So Jen said, you just had an epiphany. Because I've been focused on that reversal bar marker, stop looking at the smalls and large on the small chart for momentum. Now we'll watch them more. Learned a lot today. I love that. But Jen, momentum trades and trend trades are different, right? Momentum trades and trend trades are very different. Yeah, Jay. Hope in one hand, poop in the other. Tell me which one fills up first. Compliments of my father-in-law on that one. So Jay, one thing that I'll do sometimes, so let me give you an option for that, right? If I'm looking at all this momentum from a strong top, and I know that this is my area that it has to break, this is what I'll do. When I reach that area, Jay, I'll tighten up. I'll say, you know what? I'll give $100 back, hoping that that area breaks. And once price gets below it, I'm like, you know what? If it comes back to the other side of it, they can stop me out. So if it breaks, cool. If it doesn't, I don't give a lot back. I don't get stopped out all the way up here, giving all my profits back. I give back maybe, 40 or $50. And I'm okay to do that when I'm saying to myself, dude, strong top, strong triggers, everything says down. This thing could break. Let me tighten up. Let me force it to break, but not give a lot back because I still respect that termination condition. So maybe that'll be helpful for you. Why? Because it feels awesome, right? Feels awesome to take a big winner. Hey Jay, what if you could make $100 a trade 5 times a day without effort? That's not so bad, is it? 126 grand a year? And I think that if there's one lesson that I want you guys to get from Ron C's charts is base hits pay bills. So here's your homework, Jay, tonight. I want you to pop some popcorn. All right. Well, if you want $526,000 a year, Jay, then you're going to have to quit giving that shit back, right? You're going to have to learn how to get paid. But Jay, have you seen Moneyball? Have you guys all seen Moneyball? Did he get home run hitters? Or did he get guys that walk a lot? Did he get guys that get hit a lot? Did he get guys that get on base, right, Jay? And they damn near won it all. And Jay, I'm telling you, and guys, I can't stress this enough. There is so much pressure that you put on yourself looking to hold for bigger moves. There's so much pressure that you put on yourself hoping areas break. Until you have a plan to hold for bigger moves, because there are times to hold for bigger moves. Learn how to get paid at trouble. Learn how to put money in your account. Learn how to not give it back. And then the bigger moves will just naturally come. Jay, we could probably hang out. But the cool thing is that you begin to see ways to make more money. You begin to find ways to capitalize on bigger moves. And Jay, you want to know something pretty cool? We are encroaching the line of not acceptable. Did you know that if you can make $100 a day, Jay, you can use a trade copier, put it across 10 accounts, and that turns it into $1,000 a day on a $100 trade? Just get paid, guys. Can't stress that enough. Just get paid. And until you know how to get paid, stop trying to get paid huge. Like those 20-year-olds that want $25 an hour to flip burgers. I don't have any work ethic, but I deserve all the money. Every dollar is my dollar. It's not. Take the easy dollars. Take the advantage-riddled trades. You'll be floored. And Jay, I've had this conversation with a lot of people, and I tell people, I was like, train yourself to get paid. Jay, try to make $200 a day. And when you make it, learn how to stop. And if you can't do that, then it's not your desire for home runs that's messing you up. It's you're taking the wrong trades. You're holding too long. Most people won't stop at $200 a day, but that's $4,000 a month. Isn't that crazy? $4,000 a month from only $200 a day. But we still want more. I want it all. Bunch of Veruca salts in this room. You're looking at your picks, but you can't get it to take a pick. Man, you may need tech, Jonathan, but you get this close, right? You get this one. I like it, Jay, because your ability to read charts is rock star. So we'll see how that works. You can't get capture up, but you downloaded it. You may want to go to Jason, or whoever your salesperson is could help you as well. I can't get on your computer to see what you have. But something's not right. If you downloaded it, if you actually did you run it though? Here we go. This may be it, because I'm not always the most tech savvy guy either. So it's one thing. So I download the capture. No, let's go through this, right? I've already signed up. Let's download it. Continue. Oh, never mind. I already have an account, so we'll log in. Pain in the butt. So what's going to happen? I'm going to do this. So first you're going to download it. Okay. And then you're going to have to come over and you're going to see the download up here. So you're going to have to go to your downloads folder and there's going to be the TechSmith EXE. You're going to have to double click on that and run it so that it actually puts everything on your computer. So downloading it is half of it, but you have to actually run it. And then that's what's going to put it on your computer. And then once you do that, you should be golden. Does that make sense? So go to your downloads folder. And see if you have that TechSmith loading file. And then once you double click and run that, that should give you the ability to open up TechSmith. Awesome. That works? Cool. That's what we needed. Good stuff. Guys, we've got a few minutes. If you want to chit chat. If you're like, man, I was wondering about XYZ. I wonder if Mark would be so good to clarify. Not so much. Should we call it a day? We can call it a day. Stupid termination conditions. They never closed the gap, did they? Look at that. I guess it doesn't happen every time. There's the S&P. Yosemite, it was Yellowstone, Wayne. It was freaking amazing. Yellowstone. So, true story, and I hate to admit this, is I was super ignorant on Yellowstone. I thought that it was Old Faithful and a couple bears, and that's it. That place is amazing. Ah, very cool. We had a tour guide, and so we took 12 hours. Heck yeah, Morgan. It's on the list. It is on the list. So we had the best tour guide ever. We saw all the cool sights. Man, it was amazing. And it was a week that I got to spend with my wife and my kids outside. It's an active supervolcano. So we were standing at this one geyser. There's one called Steamboat, and it's one of the most unpredictable geysers, but it's one of the biggest geysers. And everything around it is just decimated from the heat that comes out of it. And the guy that we went with was like, he was telling us, he goes, man, it hasn't gone in like almost 3 or 4 years, and sometimes it's 50 years. And it went off. He sent me a message yesterday. It went off yesterday. And it shoots scalding hot water in the air like 300 feet. It's huge, way bigger than Old Faithful. Pretty cool. Yeah, Spice, I'm hoping to. I keep trying to get him to hop a plane and just come to Texas for a week, but he won't do it. Stubborn old fart. I don't blame him. I wouldn't have done it either, but when you're sitting in Texas, it's easy to say, hey, come on. They're getting out of their house. They're going to go to Melinda's dad's house, which is much further inland and out of the surge zone. So hopefully it just blows through quick and isn't too strong. But I mean, all the houses there are built to withstand hurricanes, aren't they? Do they have a farm? John and Melinda, Jen? No, they live... Here, watch this. They live right there. Siesta Key. So that's John's house right there. So they're right on the bay. No farm. So on the last one, the surge came up to here. But I mean, that's it. It's all ocean. They are right in the path. So fingers crossed, prayers, whatever you do. Last one being Helene, yeah. So it was a week and a half ago. It was a week and a half ago that happened. And that's what happened to his boat last time. That was on 6.5, 7 feet surge. It came up, knocked it off of the lift, and dropped the front end into the water. Yeah, Irma 2 years ago. Yeah, that's right by him, Steve. That is real close to him. So we're rooting for him. We're rooting for him. And I appreciate that. And guys, probably anybody in Nexgen that is in Florida is going to be out of touch for a couple days. I'm sure cell signals and internet's probably going to get wiped out down there. So you guys know how to get a hold of me. If you need something, feel free to reach out to me. I'll do everything I can to help you guys out. But I guess we're going to call it a day. You don't. I know you do, Steve. I've been rained on in San Diego. It's not aggressive. California doesn't have storms. When my ex-brother-in-law moved to Texas, the first thunderstorm we had scared the ever-living crap out of him. He was